calls that they are aware of the fact that they are not going to be able to run full seasons of football or probably any sport if we, take out the new Monday Night Raw program. They realize how expensive this is, and they're in no rush to sort of move fast and break things because they don't need to. They don't need to sort of go out on these new ventures to shore up their top line. What they're doing now is, how can we grow holistically top line and bottom line? So they get to be picky while continuing to delight consumers. So at this juncture, we're not yet concerned that management is going to completely go back on their promises to shareholders of pursuing profitable ventures. We think that right now this continues to be additive and a great opportunity for them.
Shelby, we have jobs data coming out on Friday, which leads me to the consumer and the read-through. Is there a way that you're playing the consumer now, and is it offense or defense?
When it comes to the consumer, we actually had a similar discussion yesterday in our small cap meeting. And it really depends on the different verticals that we look at it. So when we look at staples versus discretionary, we look at something that's a little bit more premium versus a little bit more value. It sort of changes how we look at things. And so you can be a little bit on the defense when we come to allocation, but we are also still on the offense when it comes to our stock selection. So if we want to sort of look at an example of that, I would probably think of a company called Toast. And they are a payments service provider for primarily restaurants, a lot of small businesses as well that work in consumer packaged goods. And that's been a really great outcome for us. That's in our small cap ETF. And that's been an opportunity to get consumer exposed while also just following along with the fact that money makes the world go round. So even if things are a little bit tight, consumers still tend to lead a little bit more towards services. So that's been an opportunity to stay in that vertical while still being able to sort of tweak the allocations as needed in response to the macroeconomic environment.
Shelby, where are you seeing, you mentioned your small cap ETF, where are you seeing flows in your ETF complex? Where's the money flowing these days?
Right now, there's still a lot of excitement, I think, about large caps and mega cap tech. We are seeing a bit more a better performance in smalls right now because it's a little bit of an rising tide lifts all boats, but also active management has definitely proven to work for us this time around, where we were able to avoid certain names that ended up coming under a lot of scrutiny, regulatory scrutiny, moving around indexes. So active management served us well there. Overall, the ETF space still seeing a lot of interest. Of course, we know it's easier for investors to get diversified. It's much more affordable to be active in the ETF space. It's tax efficient. So yes, on the whole, still seeing a lot of interest in, of course, just the broad market. But increasingly, I think in this environment where we might be hitting the trough for smalls getting beat up, hopefully maybe hitting the worst of the interest rate environment. And if not, sort of investors sort of understanding how that really affects small caps, and if they're well capitalized, that it could still be safe to take that venture.
And then a lot of that depends on tariffs. That's a whole different convo. Hey, Shelby, thank you so much. Shelby McFadden, investment analyst over at Motley Fool Asset Management, which is a perfect segue to our next segment. We'll be talking to Henrietta Trace of Veda Partners. We'll be talking more about the Trump administration and tariffs. I guess I just don't know how you own small caps when you don't know what that tariff is going to look like or not. And if tariffs are just used as a negotiating tool, okay, fine, but you still don't know that as an investor when you're investing in smalls.
We don't know that now, right? Yep, we don't know that now. And again, the numbers that get thrown around, 25% on this country and that country, only to be pulled back for 30 days. But what does that mean for investors? So a lot of folks, I think, are just taking a wait and see a little bit on that.
Yeah, exactly. All right, taking a look at the market. We're looking at NASDAQ off by 0.5%. Alphabet definitely not helping the tech industry this morning, and S&P is off by 0.2%. The Dow is flat. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash being brought to you by Oracle. Attention growing businesses, Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Some AI jitters, Alphabet shares dragging on the overall market. Investors focus on slowing growth for the cloud business there. That fell short of forecast as they delivered results last night. AMD, Advanced Micro Devices, falling even more, even though the chip company edged past profit expectations for the latest quarter. Meantime, the large cap tech stocks, they should continue to deliver for investors, at least according to Marvin Lowe at State Street Corporation.
They've proven themselves time and time again. The world is still transforming. The role of technology does not become any less as we think going forward. There are always winners and losers in these spaces, but kind of having said that, these companies have proven that they know how to navigate.
And Walt Disney Company swinging from an early gain to a loss right now, down 1.4%, delivering a stronger profit for the latest quarter, thanks in part to the strong performance for that movie, Moana 2.
Was not as good as one.
I would never know.
Just
I'm waiting for the book to come out. S&P 500 down 10, down 0.2%. The Dow's actually turned around. Right now, 23 points higher. The NASDAQ 100, 85 points lower. That is down 0.4%. And we check the markets for you all day long. Right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, JT. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We're broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. You can also check us out on YouTube.com. I should point out, like, my daughter still loved Moana 2, and Moana had a sister, Moana 2, so cute. So that worked.
Did you miss Tom singing the Moana song this morning?
I did. That's sad for you.
Oh, good for you.
That's all right, because I was also
I used to
singing,
like that song.
I was also singing one of the Little Mermaid songs in break, so we can all have a Disney sing fest. All right, back to the markets and the question marks. The question marks right now coming very much from D.C. Want to get more intake right now with Henrietta Treyes, Managing Partner and Director of Economic Policy at Beta Partners. She joins us from Louisiana. Henrietta, last time we talked, you said you're going to be looking for signals from what happens to Trump's cabinet nominees. Who protests, who doesn't, do they sail through? To me, everyone's sailing through. So what does that tell you?
Yeah, absolutely. It tells me quite a few things, actually, which is really helpful and constructive. Number one, the Senate Majority Leader, John Thune, does not want to hear Trump reiterate his calls for recess appointments, which takes quite a bit of power away from the United States Senate to advise and consent, which they take very seriously. So they're picking and choosing their battles. And why is that? Because we have a massive legislative agenda heading their way, and they want to be able to override the House Republican leadership. So this comes into play with the 1 or 2 reconciliation bill strategy. And as of this afternoon, Senate Budget Committee Chairman Lindsey Graham is going to start exerting his power to run over the better legislative agenda intuitions of the House Republican leadership. So this, to me, signals that the Senate's trying to keep Trump happy, knowing that they're about to run roughshod over the House, which is very normal, and that they also want to avoid the idea of recess appointments. So really constructive guidance coming from just their actions here.
All right. From the White House, Henrietta, tariffs on, tariffs off, tariffs delayed. What's the sense in Washington, D.C. about what the strategy is maybe of President Trump and his administration?
I think a lot of members are sort of not even bothering to pretend that they know strategy, but are instead giving us also really important context clues about what they're expecting to factor in from tariff revenue on the next tax bill or the next immigration, military spending, energy package. They are factoring in some level of revenue from tariffs, and the estimates are anywhere between $700 billion and $1 trillion. So it's not really a question of how the president goes about landing on putting tariffs in place. There's obviously been fits and starts, 30-day delays with Canada, Mexico. Maybe there will be a phone call with President Xi in China, but they're really more giving us the valuable guidance that they are going to be seeing tariffs in their revenue scores, which means that they expect tariffs to go on however the president decides to impose them. So again, instructive just in their directionality of incorporating tariff revenue into their forecasts.
Yeah, I thought we were going to get that Trump call yesterday. So I don't know. We'll keep waiting for that one. So actually, let's combine these 2 points then, because if we do expect to see some form of tariffs because of that revenue estimate that you talked about, and we do see no one wanting to torpedo the Trump agenda on the Republican side, does this mean that the tax bill has a significant chance of getting through and getting through quickly?
No, definitely not. What's
Never
happening
mind.
instead is the Senate is about to. It's exactly the opposite of that. I think the House Republican Conference is effectively nowhere on a budget. They have a very fractured conference and only one seat to spare in terms of votes. So they don't have a path forward on one big bill, or maybe even two. However, what the Senate is doing is they're trying to give President Trump a legislative win, especially going into his joint address to Congress on March 4th. They have an ambitious timeline where they're going to try to get budget reconciliation instructions done in February and early March, tee up actually writing the bill in April. But this would be on the smaller immigration and military spend package. The tax bill, in my opinion, has been consistent. It's not going to pass until December. We're talking about $5 trillion worth of negotiations. That takes months, indeed almost a full year. And they've known that this is coming since 2017 when the tax bill passed. So we still have a lot of work to do. And in the intervening months, we have to deal with a government shutdown on March 14th, a debt ceiling negotiation over the summer, another prospective government shutdown September 30th. There's a lot of opportunities for Democrats to throw wrenches in the gears of the Republican legislative agenda. And to me, that points a pretty clear experienced picture that the tax bill won't happen until December.
Henrietta, I guess it should be no surprise to observers that President Trump sucks most of the air out of the room most of the time. Are you surprised that you don't hear more leadership from either congressional Republicans or Democrats?
I think that they have been out of session, to be fair. And now that they are back in session, they have to deal with things like, hey, are we going to occupy Gaza? What's going on with Doge? What's going on with potentially the Doge team being able to access Treasury payment systems? There's so much out there that they're really just flying with it and negotiating behind the scenes on those legislative agenda items, especially on the Republican side. I think Democrats have not found their footing at all. I do see some opportunity for them to coalesce behind that March 14th deadline for a government funding bill. If they can come together with the appropriators and leadership and say, we want 1% more in federal spending in 25, we want aid to the California wildfires, et cetera, they can get in a cohesive place. But right now, they're just letting Trump have the show.
So what is up with Doge?
What's up with Doge? That's a great question. I think that is the question. Right now, they've implemented a number of freezes, and that is something that's obviously creating a lot of lawsuits, and 2 judges have stayed those actions. They are going through and combing through the Treasury payment systems. There's reports that Elon Musk has been at the VA going through some of those payment systems potentially. And the question is really, have they identified via their AI tech savvy any duplicitous payments, any payments that are going to people who are no longer with us? Is there any kind of abnormalities? Those are the areas where they're trying to find savings. And then obviously you have that idea of cutting the overall federal employee base. But all told, those are really small dollar amounts, less than 1% of federal spending. And by the things that I just listed a moment ago, aid to the wildfires, aid to farmers as we prepare for the trade wars, continued spending on the tax side, and 1% increases in 2025 spending, $300 billion in military spending. Whatever Doge is able to find, Congress has already spent. So I'm not seeing a lot in terms of functional deficit reduction or spending cuts that will offset what Congress will do.
Okay, Henrietta, thank you so much for that great synopsis there. A lot of moving parts down there in Washington, D.C. In Congress with all those bills that Henrietta was laying out for us. Henrietta Trez, Managing Partner and Director of Economic Policy for Veda Partners, kind of laying it all out for us. So again, some big numbers that Congress is looking at, and we're going to have to act on within the next couple of months. But Henrietta's saying that tax bill, the several $1 trillion tax bill, that's a fourth quarter 2025 issue. So that's not going to happen for a while.
No, and the idea, I mean, in theory, right, they could say, okay, well, if taxes come down, that will help offset the tariff risk. So the sequencing feels important,
Right.
and like how quickly that all winds up coming down. All right, coming up, we're going to talk more about the markets here. Lee Klaskow, Bloomberg Intelligence Senior Transport, Logistic, and Shipping Analyst, will be joining us on the U.S. Postal Service, saying it is accepting China and Hong Kong packages. I thought it wasn't. Now it is. We'll break it down with Lee. This is Bloomberg Intelligence. Happy Wednesday.
Listening to Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, Alex Steele, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so head over to youtube.com, search Bloomberg Podcast Live, and that's where you'll find us. One of the stories out there kind of gets your attention. The U.S. Postal Service, they came out with a decision that they're going to halt certain shipments from China, the small packages and things like
Anything
that.
under $800, yeah.
Yes, and now they're coming back and saying, no, don't worry about that. So I don't know what's going on with this. I need the background. I need the context. This context matters.
Changes everything.
Changes everything. Lee Klaskow, who's got the context, Senior Transport, Logistics, and Shipping Analyst for Bloomberg Intelligence. Lee, can you give us the background on what's going on here and what the UP, the United States Postal Service, is saying today?
Yeah, Paul. Just for your own knowledge, I don't think anyone really knows what's going on today or tomorrow. It's a lot of whiplash in the market. But a couple of days ago, the Trump administration decided to reduce or get rid of the exemption for packages coming into the United States through customs that are worth $800 or less. And that is a huge part of the market, and it's been a huge growth area. And what that does is so packages that come into the U.S. below that amount don't have to pay duties. So, it was the rule, the de minimis rule was really set up for small businesses, and also consumers to reduce the cost of bringing things into the United States. But China has kind of taken advantage of that. They've really used that loophole to bring packages in at lower prices and to avoid those duties. Shein and Temu are kind of two companies that account for the kind of a really significant portion of the growth that we've seen in de minimis packages, and that's been up around like 30% this year versus last year, and up almost 50% over the last couple of years. So we've seen a huge explosive growth in it, and this is one way of the Trump administration trying to close down that loophole and have, I guess, the Chinese retailers pay their fair share.
Right. That makes sense. So then why is the U.S. Postal Service accepting those packages?
Well, they're accepting them, but they're still going to have to pay a duty when they come into the U.S. So it's not like they're not exempt. The stuff coming in from China are no longer exempt from duties. And so therefore they're going to have to start paying, and what that's probably going to do is limit the amount of volume coming in through that way. What a lot of retailers have been doing because of fears of these trade wars is that they're bringing kind of distribution closer to the consumer, and so they are opening up warehouses in the U.S. to sell their goods to kind of help themselves get around that.
So will there then be presumably either fewer products available to U.S. consumers, or if they are available at a higher cost because of the tariffs, is that the impact on the U.S. consumer?
Well, so the U.S. consumer, I don't know if you know anyone that shops at Shein, but the stuff is very cheap clothing. It's like fast fashion. I think people get like 4 or 5 wearings out of it, and then it disintegrates. But it's very cheap, and it allows people to import that in from China. So what companies like that will end up doing is like bringing those sort of products in mass in containers, and then setting up distribution warehouses here in the U.S., getting closer to the consumer. So, what it's going to impact, like the reduction, or what the Trump administration has done with the de minimis rule with China is really going to impact the UPSs and the FedEx of the world, because that's been a growth area for them in a time where the backdrop just hasn't been great for the parcel industry.
And just so we're clear, no, I don't shop at Shein. In case you were wondering, I stopped buying clothes that like wore out after 2 washes. Just saying, it's important just to get that out there. So Lee, what does this wind up meaning then for like FedEx and UPS?
So it's going to mean lower volumes, and so that is definitely what's going to probably happen for the FedExes and the UPSs of the world. It could maybe account for maybe low single-digit percentage of their volumes. So it is going to have a knockoff effect on volume expectations for 2025.
And is this something that, is this a done deal, some of these duties here, or is it one of these things about Trump when it relates to the tariffs that maybe we'll delay them, we'll pull them back, that we'll make them less severe? How's your industry thinking about it?
Well, the Biden administration had the de minimis rules under a microscope as well.
Okay.
They just never really acted on it. It really is unfair for other retailers, because they're really able to skirt certain duties and just make their product that much more cheaper and that much more competitive versus other alternatives. So this is something that I think that was expected somewhat, the de minimis rule.
Mm-hmm.
I think maybe some people thought maybe that it would be lowered from 800 to a lower amount, as opposed to just saying that China can't use this anymore.
All right, Lee, we appreciate it. Thank you so much, Lee Klaskow, Bloomberg Intelligence Senior Transport Logistics and Shipping Analyst. Interesting that then they would sort of just relocate and get bigger shipments and then set up distribution.
Right.
So that makes a lot of sense. I wonder what it means for prices, because the
I
whole
would think
point,
that would add to their costs.
right? Because the whole point of the stuff is it's so cheap. So you're okay just getting 2 wares out of it because it's so cheap.
Really? around?
This is what I
I'll
hear.
go check it out.
This is what I hear. No, don't do that. No. I feel like at some point you cross the Rubicon and you can't do that anymore in your life. All right, we have a great hour lined up for you on Bloomberg Intelligence. Want to take a quick look at here on the markets. You're taking a look at the Nasdaq off by 0.5%, the S&P off by about 0.2%, and the Dow is pretty much flat. Taking a look at the bond market, we got that ISM services data that was a little rough. You're seeing yields dropping like a stone on the back end. Okay, for our listeners in the U.S., reminder, you can listen to us via satellite radio, Sirius XM, channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. You can check us out at Sirius XM, channel 121, presented by Oracle.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Wednesday, everybody. Alex Steele here alongside Paul Sweeney and John Tucker. This is the second hour of Bloomberg Intelligence Radio. We are covering all the news in finance, economics, and politics for you. Mandeep Singh of Bloomberg Intelligence will be here to break down Uber's earnings, but also Alphabet. We knew that CapEx spend was going to climb to 75. Well, now we know it's going to be 75 billion. Why the market's hitting it so hard? Plus, we'll get the latest economic data read with Mike McKee of Bloomberg, and Lisa Nee is managing partner and head of real estate over at Eisner Amper. We'll discuss the latest in the commercial real estate sector, especially if Fed cuts might not be coming as fast and furious as we thought. Morgan Stanley now saying just one cut this year instead of two. And then Barry Ritholtz, founder of Ritholtz Wealth Management, will talk about things. I think that's a good tease for him, right? He'll just say things. He'll just whatever is on his mind.
Stocks,
and we like that about him. Yeah.
Yes, exactly.
But let's get all caught up here. Here's a business flash with John Tucker.
All right, the major stock averages off the lows of the session, they have now turned mixed. In fact, S&P 500, you have 305 stocks higher, 195 are lower right now, and also high volume day for the S&P 500. Google parent Alphabet proving the biggest drag in the S&P 500 in terms of index points after those cloud growth problems, showing some slowing there. Amanda Gotti at PNC Bank urging investors, look at company results overall during this earnings season.
I do think investors should be focused on earnings season. I mean, we're really in the thick of it here, and it's always where the rubber meets the road in terms of the underlying fundamentals. I think what we've seen so far, forget about what happened just last night, but in general, earnings season has been coming in really solid.
Right now, the S&P 500, 13 points lower, down 0.2%. The Dow up about 4.5 points, and the NASDAQ 100, 75 points lower. That is down right now about 0.4%. Movement in fixed income in the bond space, the treasuries anyway, 10-year yield right now, 9 basis points lower, 442. That should give a lift possibly to tech stocks, maybe. 2-year yield right now, which is more policy reactive after we got some of that data this morning. That is down 5 basis points right now at 416. And as we look at crude oil, NYMEX crude, U.S. stuff down 1.6%, 71.54 a barrel. A war on the bloated workforce. Elon Musk and Uncle Sam? No, it's Amazon. Andy Jassy's campaign to flatten Amazon's middle management ranks is rippling through the company. Employees in multiple departments describe an uncertain workplace where old career paths are drying up for managers. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele and Paul Sweeney live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube. You can search us. You go to Bloomberg and go to youtube.com, search Bloomberg Podcast Live, and that's where you'll find us. Got a little bit of weather coming into the northeastern part of the United States over the next 24, 36 hours. Let's get the latest with Rob Carolan. He's a Bloomberg meteorologist. Joins us on the phone. Rob, talk to us about this weather coming east.
Well, Paul, it's a combination of warm temperatures coming up out of the southern United States with some moisture and some energy dropping down out of the Dakotas where it's still cold. It's going to set off a little bit of freezing rain and rain this evening around the district and Baltimore by about 8, 9 o'clock. They'll have some icing through the late evening hours, and then it's plain rain there by the time it ends tomorrow morning. The problems are going to be for the New York City commute tomorrow morning with a little bit of light snow changing over to some light rain. New York City under a winter weather advisory starting at 4 a.m. I do think the commute's impacted. Now, Boston, it's a different story. They should get the morning commute in before the snow starts around 8, 9 o'clock in the morning. It's the ride home that's a problem in Boston. We'll be looking at rain along the coast in Boston tomorrow afternoon, but just inland, they could see 2 to 4 inches of snow along with some sleet and freezing rain. The worst of this system, guys, is going to be just to the north and west of I-95 from late tonight into tomorrow afternoon.
All right, Rob, thanks a lot. We really appreciate it, and I'm sure spring's just a moment away. Rob Carolyn, Bloomberg meteorologist, joining us.
Next week, I think.
Really?
Catchers and catchers, yeah.
I mean, I definitely did not wear my snow boots. Like, I'm not ready for this again. Okay, let's get more on the markets here and dive deeper into some of the equity stories. Norma Linda, Bloomberg equities reporter, is joining us. All right, Nora, you're looking at Alphabet, hashtag Google. That is still lower on the day. Walk us through what you're seeing.
Yeah, I mean, today's really a busy day. So many earnings to walk through. But when we take a look at Alphabet, we're seeing shares plunging. They're falling as much as 8%. And this is the worst day on since October of 2023. So quite a far fall for the company, but this is after they reported lower than expected revenue in the fourth quarter, and that's dragging on the stock here. But not only that, the company announced a $75 billion in 2025 CapEx, and that is blowing out of the water expectations from analysts who thought that they would spend about $57.9 billion. These are big numbers that we're talking about, but for them to hear them super bullish and really wanting to spend on AI, and particularly the cloud unit, which has been the clearest indicator of how the AI boom is working, and we think about DeepSeek and all that came through last week. There's a lot that investors are digesting right now, and it seems as though they may be a bit nervous when we're thinking about Alphabet here.
It's interesting when Facebook a couple weeks ago takes their CapEx up, the stock reacts positively.
Right.
In this case, it reacts negatively. There's a lot of other moving parts too, but that's essentially about the CapEx spend.
Yes, and Google was at a record high before the numbers.
This is true.
But I guess Meta was also on an upswing too. To that, to that point. What else you got?
I'm also keeping an eye on AMD, also lower. Their shares are hitting their lowest level since 2023, tumbling as much as 11%. And this is after they gave a disappointing outlook for AI growth. This is not what you want to hear. Definitely a major red flag here for AMD, especially as people are thinking about this in terms of its competition with NVIDIA, who we know they've been struggling to catch up with here. The division, they said it'll grow by a percentage in the strong double digits this year, according to the conference call. But I think that's yet what Wall Street has to see.
So is this just like it's competing with NVIDIA, but clearly not there yet? But we didn't expect it to be, right? But it's just still the disappointment, I guess.
For sure, and they were down 18% last year. So I think investors are really looking for returns here.
What I've done well is Broadcom, and that's based off of Google's earnings. So that was a nice read through from there as well. All right, Nora, thanks a lot. Norma Linda joining us, Bloomberg Equities reporter. All right, one other company we're watching is Novo Nordisk. That company is seeing an Ozempic boom, prompting another sales surge. Madison Buller is Bloomberg healthcare reporter, and she joins us now. Walk us through the numbers that we heard today.
Yeah, so revenue will likely grow by 16 to 24%, Novo said this morning our time, which just goes to show that the Ozempic boom and the Ozempic hype around these drugs, which Ozempic obviously is the diabetes drug, Wegovy is the version for weight loss, but that boom is not stopping or slowing down anytime soon.
So I kind of thought this would be you get it for a few months and then you stop, maybe you go back again, but it just seems like we haven't seen the top of the demand curve yet, have we?
No, we haven't. And that is happening to some degree. I mean, we know that the drop-off rates actually for these drugs are pretty high. I mean, like 50-60% of people don't take them really long-term, more than a year. But at the same time, the demand is not letting up. So some people go back to taking the drugs. There are new prescriptions starting. So that really hasn't slowed down the demand for these drugs yet. But that is something that drug makers are trying to figure out how to keep people on these drugs longer, and whether that's access, improving affordability, making sure that they're not getting cut off by insurance companies, side effects. just figuring out maintenance dosing better. So those are all things that are top of mind still.
So what we previously knew about the weight loss drugs is that they were constrained by supply, and that was wind up hurting their growth trajectory. Where are we now with that?
Yeah,
for
so
Novo?
for Novo, there are going to still be supply issues, or they're anticipating some this year. They did say that they think that they'll get off the FDA shortage list this year, which would be a big deal for them, particularly because that would hypothetically stop compounding and the rise of these knockoff weight loss drugs that are allowed when a drug is in shortage. For Novo's rival, Eli Lilly, the supply issue has been a lot better. They sort of solved that last year, and so that's something that has been important for Novo because they are still constrained by these supply issues while Lilly is not. So that's something that's going to continue to be a big theme this year, but both companies have invested billions of dollars to build out production capacity, so some of that will probably start to come online this year.
Where is the industry in coming up with an oral application, just taking a pill instead of the shot, which presumably the pill would be easier to take, maybe less side effects? Where's the industry there?
That's exactly where things are sort of heading this year. I mean, I was at a big healthcare conference a couple of weeks ago, and most of the pharma executives were saying that the biggest readout this year is Lilly's oral weight loss drug, which is called orforglipron. It's kind of a mouthful, but there's a big readout happening mid-year, a phase 3 readout, and that's going to be super important. That drug is not quite as effective as the shots, but it's still pretty good, and it's an oral drug, which is something that investors are closely watching. Novo is also working on a higher dose pill. They actually already have like a pill version of Ozempic on the market. It's called Rybelsus, but it doesn't work very well for weight loss. So they've been testing a higher version of that, but the issue has been supply again. It takes more of the active ingredient to make this pill, so they haven't been able to launch that yet. So they're hoping to file for approval this year with that as well.
So to that point, in terms of all the drugs that are out there, I know that Novo also came up short in some of their studies in terms of viability or reducing different risks. Can you walk us through kind of where we stand on that?
Yeah, so obviously the big thing for pharma is always coming up with the next big thing. They can't be satisfied with what they have right now because patents expire and eventually they'll need to follow it up with another blockbuster. And so Lilly and Novo, even though Ozempic and Wegovy and Zepbound are really good drugs and work quite well, they need the next thing. And so Novo and Lilly are both working on next generation products. For Novo, one of the closely watched drugs is called CagriSema. And late last year, in December, they had a readout for that drug that fell short of their own bar that the company had set. They said that they were looking for 25% weight loss. This drug came in below that. I mean, it was still pretty effective. It was like 20 to 22% weight loss. That wasn't good enough for investors, and there was a pretty big reaction at the end of the year, and they've since sort of recovered. They have other next generation products that they're testing that they released results from in January, and that sort of brought them back into good favor. But we'll see what happens with these next generation products.
All right, great stuff.
Yeah.
We'll see how it
They
goes.
work.
They work, I know. They're amazing. I swear, every headline you had, they're like, this cures everything.
Yes.
And you're just trying to keep up. I also know how Madison remembers all of these drugs in their names. It's actually quite impressive, Madison.
Yes.
Thanks very much, Madison Muller, Bloomberg Health reporter, joining us. All right, let's go to the big mover to the downside, and that is, of course, Google. Mandeep Singh is Bloomberg Intelligence Senior Tech Industry Analyst. Why do you think Google's getting hit so much?
Well, everyone thought they would keep growing, cloud business at mid 30%. And because they raised CapEx, the expectation was that cloud should continue to perform better than expected. So there was a miss on the cloud side. I think personally it has to do with the fact that they are rolling out more AI on all their apps. And we talked about, how they have 7 apps with over 2 billion users. Look at what Meta is doing. They're rolling out AI across all their apps, Instagram, WhatsApp, etc. Google is doing the same. And so if they're rolling out AI, they need more capacity for their own internal consumption. And so I think the CapEx increase and the rollout of AI on their own family of apps probably was the reason why the cloud underperformed. And there could be one or two customers who didn't ramp up as expected because they were supply constrained. So all this kind of tied together. I don't think we need to make a big deal out of the fact that, cloud growth was 30% and not 32%, which was consensus, because everyone knows we are in a supply-constrained environment when it comes to these GPUs.
Talk to me about Gemini. What is Gemini? Is it working? What are the metrics? Talk to us about Gemini.
Yeah, I mean, look at...
Gemini, is there AI?
Is there a large language model equivalent to ChatGPT, which Microsoft has, or Meta Llama model that they have? And so they're very similar to Meta in the sense they have their in-house model. In fact, they have their own chips as well, the equivalent of NVIDIA GPUs. So this is like the one company that's vertically integrated throughout. I mean, to me, they are the equivalent of Apple on the data center side, end-to-end vertical integration. And now they are rolling out their own large language model on their family of apps. So what they told us about search is search engagement has gone up because they are rolling out AI. The AI overviews are keeping more people on the search page. So instead of somebody clicking on a blue link and going away, now they're spending more time on that search page.
Which is a really good thing for them.
Which is a good thing. I mean, and they're able to monetize it with ads. So it's not as if they're showing you free AI overviews. They're showing you ads along with it, and they're monetizing that.
Although I really question, have you seen the links that come with that? Like, I'm like, what is this link? It's very strange. Like, the info might be fine, but the link is weird. I'm just saying. And other stocks that you cover, Uber is down a whopping 7%. What happened here?
Well, I think with Uber, the narrative is Waymo is rolling out more cities. So right now, Waymo is in 5 cities. In 2 cities, they have partnerships with Uber, but in other cities, they are going on their own. And with Tesla planning to roll out their robo-taxis middle of this year, and Musk's involvement in the government, everyone feels they're going to get their regulatory approvals quickly, and that will be a big overhang. I don't think there was anything wrong with the Uber quarter, but it's just when you have that narrative that there will be autonomous vehicles, where we have a proof point. Waymo is doing very well in the 5 cities it's operating in. I mean, the number of rides are, a fraction of what Uber is doing in a quarter, but it's still, people like that experience.
Who's going to, for Waymo and all these drivers, who's going to make the vehicles?
So in the case of...
so you've already got a gajillion regular vehicles on the road, and Ubers and Camp and all that kind of stuff.
These are specialized vehicles with, LiDAR and radar and all the sensors, the suite of sensors, and they cost a lot. Every Waymo vehicle is over $100,000. So compared to your normal vehicle, they obviously have a premium price point, and they need to be maintained, etc.
So if I'm a bull on Uber, I say, yeah, the driverless cars are out there, but they're just a fraction. They're not that much of a competitor.
Absolutely.
From a numbers perspective.
That's perfectly fine narrative, and that's what Uber highlighted, that the safety aspects will come into play, even though Waymo is in 5 cities. It's not as if they'll expand into 50 cities overnight because of all the safety aspects that they will run into.
All right, Mandeep.
Yep.
Really good stuff. Thank you so much. I know he's so busy. But he's
we should just put his desk here.
Look, he's walking around with an IFB.
I know.
Like that's a TV thing that you need. Like he's that kind of guy right now. All right, coming up, we're going to talk more on the economic data landscape. Mike McKee, Bloomberg International Economics and Policy Correspondent, will be here on the ADP report as we head into Jobs Friday. Plus, Lisa Nee is managing partner and head of real estate over at Eisner Amper. Will break down the latest in the commercial real estate market. If we don't get those cuts from the Fed in the same way that we thought, what does that mean for the commercial real estate sector? I have yet to have a guess that says, yes, this area really stinks. I want that guess.
Yeah, well, if they own some B and C office space in New York.
Who does that?
I don't know.
We need those people, although they never come on and talk about us. Okay, this is Bloomberg Intelligence. Happy Wednesday.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. This Bloomberg Business Flash. We are being brought to you by Oracle. Attention, growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. The offer ends March 31st, and see if your company qualifies at oracle.com/Bloomberg. Economic data today seems to strengthen the case for Fed rate cuts to resume later this year. So that's pushing yields lower and helping ease some of the declines in stocks. In fact, the major stock averages, they've turned kind of mixed right now. The Dow dead flat, S&P 500 15 points lower, and the NASDAQ 100 down 102 points. It's the big tech stocks that are leading Wall Street losses. You had underwhelming results from Alphabet, driving their shares toward the worst slide in a year. The parent of Google, right now, those shares are down 8.4%. Then you had some disappointing results from AMD after the close yesterday. Those shares are down 9%. Apple also is seeing some pain here, down 1.4%. This is China is weighing a probe into its app store, the fees and the practices there. And United Health says it's contacted the SEC with concerns about investor Bill Ackman's since deleted post on X, suggesting that the company overstated profits. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast Live. A lot of economic data coming out this week. Today we had ADP numbers came in. The employment change is a little bit better than expected with a positive revision. ISM services came in weaker than expected. Tomorrow we have continuing claims and initial jobless claims. And then, of course, Friday, the non-farm payrolls. It looks like the change in non-farm payrolls, the consensus is 170,000, but the whisper number is about 195,000. So let's break it all down with Mike McKee, International Economics and Policy Correspondent for Bloomberg News. Michael, today's data, tomorrow's data, Friday's data, what's kind of the important stuff here?
Friday's data, to the extent that the president doesn't trump that.
Yes.
And I mean that both in the pun sense and in the literal sense, because what's happened is everybody has written the Fed off for a while because of the uncertainty out there. And so it isn't clear how much impact the Labor Department numbers are going to have. It might have changed people's view of what the Fed was going to do, but right now it's not going to do that. Today's ADP number, people trade on it, but it's easily dismissible. You can look under EcoGo and they look at the prior number and the revised number. Last month, they said 122,000, and we got 232,000. This month, they have revised that 122 to 176. Yep. So they are not predictive at all of what's going to happen.
But we like talking about them anyway. There's that too. What have we heard from Fed officials over the last 24 hours? I feel like there's been a lot of Fed speak, and it all feels like they're coalescing around we're worried about inflation. We don't want it to move higher. We're going to hang out for a little bit.
Yeah, Tom Barkin was here with us on Bloomberg.
Right, so he was schmoozing with them. I was schmoozing with the CEO of Chevron. We're doing our separate schmoozes
we're having little parties in the green room. And he, like everybody else, Mary Daly last night, Philip Jefferson, the vice chair last night, all saying the same thing, that we're in a good place. We can react in either direction if we need to. If inflation rises, they can raise rates. If inflation falls or the economy weakens, they can cut rates. But right now, we have no idea what's going to happen to the economy because Trump. And so we're just going to sit and wait, and we're fine with that.
And this is a Federal Reserve is it primarily focused on inflation still, as opposed to the labor
I asked
market?
Tom about that, and it is inflation that's driving the narrative right now. Things could change in terms of the strength of the economy, but right now they're anticipating the economy stays strong enough that we don't see a serious deterioration in the labor market. And they came into the year thinking that interest rates were too high for where we are in the economy. They've argued that they are restrictive, and so the presumption is that the next move is going to be a cut, but the data to give them permission to do that.
So to that point, Bloomberg Economics had their note out about looking at jobs Friday, and they were saying we're going to get a lot of revisions, and we could actually wind up seeing a much weaker employment picture over the last year than we thought. True?
Yes. This is the annual benchmark revisions, and it's been teased for quite a while because you start each quarter they get more of the revisions in from the survey, the quarterly economic workplace survey, which incorporates tax records, and we know that this will be changes to the jobs numbers up through last March. So it isn't really relevant to the Fed. It has relevance in political campaigns because in this case, if we see a couple 100,000 lower jobs, or as some people say 1 million, then you could go out and blame the other guy. But the Fed is looking forward, and as I say, this is backward looking, and it doesn't change the unemployment rate. And the unemployment rate is what the Fed is looking at. There's always confusion over this January revision situation, but it really doesn't mean anything in terms of your investments.
All right, Michael McKee, thank you so much. We appreciate that. Michael McKee, he's the head of the economics coverage there for Bloomberg News, joining us here in our Bloomberg Interactive Brokers studio. Interest rates, they impact the real estate business.
Oh, yeah, it does.
Commercial real estate business. Lisa Nee joins us, managing partner and head of real estate for Eisner Amper, joining us here in our Bloomberg Interactive Brokers studio. Lisa, let's talk about that. I mean, it looks like rates are coming down, but maybe not as fast as people like. How's that impacting just commercial real estate broadly defined? What are you seeing out there with your clients?
What a great segue. Thank you for having me. So it's exactly the perfect way to start talking about this, is that with interest rates being where they are and the unknown of what's going to happen going forward, we're sort of at a standstill in valuation. However, the activity in real estate for 2024 was up, and we do predict 2025 having a lot more trading, people going back and forth and trying to figure out some deal flow, which means that valuations have to come, which is tied to interest rates. It's not going to get back up to where we were in 2017, but I think everyone's really optimistic for 2025 that there is going to be some things happening in there. When we talk about interest rates, and we just heard from Mike McKee where the settling is and what the Feds are doing, it's interesting. Once rates are still low for the people who have existing mortgages and things, it's not going to make us able to go out and sell our houses because we still have very low interest rates. And so all of that is going to affect multifamily home buyers. It's going to affect office. It's still going to trickle through the rest of all the sectors of real estate. So yes, you're right. It's a great segue into real estate is where we are on interest rates. And that's the big unknown, and waiting and seeing with the inflation being where it is and the economy doing well. It's a wait and see approach.
Yeah, and just how quickly we've re-rated, really. We're looking at just over 40 basis points of cuts priced into world implied rate probability. Morgan Stanley sees just one cut now in June rather than two in March and June. How quickly does that feed through to prices?
It actually feeds through quicker than it's even announced. It's almost like people know before and anticipate it, so the valuation is already baked into it. And so it feeds in immediately. And so when you think that Feds are going to announce it and things are going to move drastically, it's already moved once the anticipation is there and what they think are going to do, what they think is going to happen with those rates.
Let's talk about just office. What are the trends here in office? I guess the first question is anybody going to call a bottom? Has anybody called a bottom? Is anybody thinking about that?
Do you want me to make a prediction right here?
Please.
Should we do it?
Yeah,
Should we have some fun? Okay, so prediction that I heard was 2026, New York City is going to have a shortage of office available.
Really?
A shortage, because there's been a lot less construction. We do have some conversions, not a lot, but there will be some conversions to residential. The trophy buildings are occupied, which is going to help the A's and B's. And so we know that tech is going back to work. We've heard those announcements. Today, this place is the busiest it's been, I think, in a long time. And media has made an announcement that they need to start coming back to work. So with everybody making those announcements of back to work, there's been less office coming on the market in the last 2 years or 3 years because of construction costs. And so prediction that New York City, you want another prediction?
Yeah.
Sure.
Don't write off San Francisco yet. And why? I know we're very bleak on that, but 72 cents of every AI dollar is going into San Francisco. And so with all the money going into San Francisco...
Meaning that because people live there, work there?
So 83.2, and I think that's the right statistic. Somebody will write it if it's not. Of the talent is in San Francisco based.
Okay.
And so the VC venture capital firms that are funding the AI are mandating that they want to see the people and they want that in-office experience. And so if 83.2% of our talent is in the San Francisco Bay Area, who are funding and working on the AI, we see where the future is. And so maybe not to write off San Francisco. So a little bit of optimism, I think, in office. We'll see in a year from now how off I was, but we'll be optimistic.
Have we seen any transactions of note in New York City that gives you a sense of where valuations are?
Yeah, there's been a bunch of movement. I think there was a 57th Street. There was a property that just was acquired. And so people are moving, and the values are, strangely enough, they're holding up. And so the whole thing is the buyer and the seller is willing to come up to where they think prices are. And I think yesterday there was a large transaction that just happened on 57th Street, which is noteworthy, I think.
Yeah, definitely. What do you think the bottom looks like?
I'm hoping we passed it.
Okay.
I think we're headed to a really good direction from
so I guess what the trajectory from now until 2026 does look like. Like, is it bumpy? Is it a straight line up? Is it a curve?
So everyone was hoping for a soft landing, and I think we got the soft landing. And so when you're looking for the future of to where, people are seeing where we're at, secondary markets are going to be really, really hot. So is the live, work, play environment. And that type of world. Now, New York is live, work, play, but look at the secondary markets that are going to create that live, work environment for them. And so if you look at, we could go into this another time, the history of the malls, but that's really what was supposed to be created. It wasn't supposed to be a mall with 2 acres with 70 acres of parking. It was supposed to be houses, hospitals, schooling, businesses created around the malls. That's what people want. And that's what we're going to start creating. And so once we give people that sort of environment, I think it's going to really, really work. And then looking at operational real estate, data centers.
Yeah.
Right? So there is a lot of optimism out there in real estate as to what we're looking forward. And then just watching interest rates really closely.
I have to admit, I'm still surprised every day I walk out on Lexington Avenue, that retail space has not sold.
No, but they're redoing it. They're doing some. I wonder if it's now rented because that space, the Gap used to be.
But it still feels like there's so much unrented retail in Midtown Manhattan. It really surprised me.
And Upper West Side too.
Yeah, but when you look at it, though, there was so much more, and we know that retail was doing horribly, years ago, and it is making that comeback of changing it. What's that retail experience for? I mean, I know that we read the 5 or 4 big boxes that are closing stores, and so that scares everybody a little. But again, it's coming back to that live, work, play, and finding that balance of what people want in that area. This is still relatively commercial here, and not as residential. So you're not really living where you're working here, and so it'll be interesting to see. And without the, Bloomingdale's is still a very large anchor to this area. So I think it's going to get leased up over time.
I don't want to live where I work. Just putting it out there. Anyway, Lisa, thanks a lot. Always great to get your perspective. You're so fantastic. Lisa Nee, managing partner and head of real estate for Eisner Amper, and she comes with predictions.
Oh boy!
And in the office, I love that. It's huge. All right, coming up, Barry Vitholz, founder of Vitholz Wealth Management and host of Masters in Business, will be joining us for his take on the markets. It's kind of a nothing day. Even the Nasdaq is off just 0.3% off the lows of the session. The S&P is pretty much flat. The Dow up 0.1.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Well, the major stock averages, they've actually turned mixed right now, well off the worst levels of today's session. In the S&P 500, the worst performing industry group that belongs to, not surprisingly, communication services. And, of course, that is where you find the parent of Google, Alphabet. Those shares right now, Alphabet shares, down 8%. And they reported after the close slower growth in the cloud business that contributed to lower than expected revenue for their fourth quarter. As the company results continue to pour in, Julian Emanuel at Evercore ISI, just heard a little bit from him. He expects earnings growth of 10%.
The positivity around 2025 is that, and we started to see this happen at the end of 2024, is the other 493 stocks in the S&P 500 have started contributing to positive earnings growth, and that's something we expect.
Just about half the companies in the S&P 500 have reported results so far this season, 78%. Delivering positive earnings surprises. The S&P 500 right now, let's call it unchanged. I mean, it's down 2 points, 6,035. Dow Jones Industrial Average, that is up 69 points. And the NASDAQ 100, the tech-heavy NASDAQ 100, down only 22 points. That's a decline of 0.1%. I'm going to say yields might have something to do with that. The 10-year down 9 basis points, 442 right now. The 2-year, that is 4 basis points lower. That is at 417. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate it. Alex Steele and Paul Sweeney live in the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube. So head over to youtube.com and search Bloomberg Podcast Live, and that's where you will find us. All right, we're getting into, I guess, week 3 of the second Trump presidency. And as expected, the news flow, seemingly on a daily basis, is really, really heavy, and it's difficult for investors to kind of suss that all out and separate the noise from what might be more important data points for this market. Barry Ritholtz joins us right now, host of Masters in Business on Bloomberg Radio, is also the founder of Ritholtz Wealth Management. Barry, I guess we're all kind of flashed back to the first Trump presidency, when again the market really has to work hard to kind of figure out what policies coming out of this Trump administration. How do you kind of separate the noise from what might be useful information?
So remember in 2016, both leading up to the election and then between Election Day and January 20th inauguration, there was a constant stream of, I don't know what to call them, Trumpisms, where we would target a specific company or a CEO. And when that first started to happen, there'd be this huge overreaction, and then the pendulum would swing the other way, and it would sort of stabilize. And that worked for a while, but eventually the market figured out, oh, this is all noise, zero signal. And we're kind of going through the same process in 2025, in the beginning of Trump 2.0. So this week is a perfect example. We get this crazy set of announcements over the weekend, 25% tariffs on our closest trading partners. Don't worry about the facts. Here's what we want. And then first Mexico agrees to do something that they've already been doing. Like 10,000 troops at the border, we have 15,000 troops. All right, we'll draw 5,000 troops down. And the same thing with Canada. So we create this crazy problem. We create, that's artificial. We create a solution. I think the markets have kind of sussed out that there's a whole lot more Sturm und Drang. There's a whole lot more noise than signal here. And let's watch what actually is done as opposed to what's being said.
So Barry,
show us the legislations, show us the policy. Don't, the social media trolling, and that's all it seems to be to the market. The market's saying, oh, this is just trolling. We're going to ignore it.
So Barry, does that mean that the reaction function that we saw, say, Friday slowly dies out?
Yeah, that's been, 2016, 2017 is a perfect example. He would target specific companies. I did a column for Bloomberg where I created two different indexes. One is the anti-Trump index, where it was people that were not kowtowing, and the other were the companies that Trump was targeting, and like the oligarch index and the woke index. And what was kind of funny is you had a ton of volatility in the beginning, and within a few weeks, that volatility just went away because people came to realize it's just noise. And look, there are going to be a whole lot of policy changes, and there's going to be a whole lot of things that are going to be different under this presidency. But we have to see what's actually being done. And a perfect example, the Elon Musk letter, whoever sent it, telling all the 3 million federal employees that they're being laid off, and here's a buyout option. And I just saw a chyron on a cable news channel, 20,000 federal workers take the buyout out of 3 million. You know, you look at that and you do the math, that's 0.0067%. It's not even a rounding error. So let's actually see what happens. Like, I am not a MAGA sort of voter, but you have to look at what's actually happening versus an endless fire hose of noise. That flood the zone approach has been very effective for Trump to kind of just overwhelm people. But let's look at what's being done. The thing that I'm focused on is, when are they, and in what context are they going to renew the 2017 Tax Cuts and Job Act? And what else is on the agenda that's actually going to happen? No, Canada is not going to become the 51st state. No, by the way, Canada, far more liberal than the United States, huge area. So are we really going to bring in 12 states that are likely to vote Democrat? I don't think so. Are we going to invade Greenland or Panama? I don't think so. I don't think it's really, is Gaza going to become a province of the United States? Like, all of this stuff is just, you have to step back and say, rationally, is any of this going to happen, or is this just right? I don't recall running on. I want to make Gaza a province of the United States, and we're going to make Canada.
So Barry, if people are successful, maybe sifting out some of the noise, what are the fundamentals that you're looking at right now in this market?
So you guys just, John Tucker just talked about it. 78% of earnings report were upside surprises. I want to say the average is somewhere in the mid-60s. So on average, earnings are doing better than expected. I don't think we're just going to throw out every regulation. I don't know how you do that, but I do expect to see some form of deregulation. Certainly expect to see the FTC be less aggressive. That means more mergers and acquisitions, more IPOs, more stock buybacks, more secondaries. All these things tend to be supportive of higher stock prices. If everything else being equal, and there is no, outside externality that affects things, like a random event like Russia invading Ukraine, all other things being equal, a defanged FTC tends to allow a lot more market activity, meaning mergers, IPOs, those sort of things. If it becomes a little easier to go public, if there are fewer regulations, hold aside whether or not that's a good choice. But certainly over the intermediate term, it supports, more market activity and higher prices.
All right, Barry, thanks a lot. Really appreciate it. Barry Ritholtz, founder of Ritholtz Wealth Management and host of Masters in Business, joining us on how to manage it, which is so surprising then, the reaction function of the market, knowing what we knew back in 2016, right? Like, we saw how we functioned, we saw how policy came through, but yet still takes a while for the markets to learn their lesson.
Well, I think Henrietta Trez from Veda Partners kind of summed it up pretty well, which is, for most things that involve money, you got to go through Congress for most things. So you can take the announcements with a little grain of salt, because at some point, again, if it involves the purse strings, you've got to go through our good friends down in Washington, D.C. Looking at the market right here, S&P, a little change, Dow up 85 points, NASDAQ down 24 points. Yields are coming in about the 9 basis points on your 10-year Treasury. We're now at 4.42% on a 10-year U.S. government bond. This is
This is Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, Alex Steele, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. So head over to youtube.com and search Bloomberg Podcast Live, and that's where you will find us. Again, the story over the past several weeks since President Trump's inauguration has been tariffs, tariffs, tariffs. Certainly one of the economic policies that seems to be a favorite of this president and his administration. Let's break it down with Molly Smith, U.S. economy editor for Bloomberg News. She joins us live here in our Bloomberg Interactive Broker Studio. So, Molly, I know you guys have stayed on top of this tariff situation. We had some pretty big numbers starting the week, potential tariffs against Mexico and Canada. Now we get a little bit of a 30-day reprieve. What do you think are next steps here as it relates to these tariffs?
Oh, man, I mean, it's anyone's best guess. You guys know better than anyone that the news is changing seemingly by the minute here. I think everyone right now is in a bit of a wait-and-see mode as we have this 30-day reprieve. I'm sure I would think, Canada and Mexico are probably hoping that by bolstering the border on their side that maybe that will alleviate some of the tariff pressure. But you still have to make a balanced budget in some way. Not that the U.S. has ever really run a balanced budget here, but still have to make the math. And if you're going to be cutting taxes, by as much as the administration wants to, that revenue needs to come from somewhere else. Tariffs were never going to fully offset it, but still need to be raising revenue in other parts of the government.
Yeah, but if anyone has a young kid right now, I can tell you the way they do math now is different than what they did before when we were kids. It just shows to show that math sometimes isn't math. Anyway, what are companies doing though? Like they have a reprieve, but something's still looming. So how can they prep?
That's exactly the challenge, and that's what we had a great story out on today, written by my colleague Enda Karan out of Washington. He spoke to so many manufacturers throughout the country of like small and medium-sized businesses that employ a couple thousand employees, and just speaking to the broader uncertainty of being in this holding pattern of what are you supposed to do when your lead time on really how you operate your business is to the tune of at least 8 months, if not 2 years out in advance of when you're trying to make orders and investment decisions. And you're wondering every 5 minutes, is there going to be some new threat to your supply chain? So, the reporting that Enda did was really fantastic. Encourage you all to read this story. It's about just really what a variety of companies are doing. And, one of the companies that he spoke to was saying how they're pausing all of their investment and hiring plans right now, that there's just really nothing else they can do but to wait.
It's interesting. The timing is odd, as you point out or as Enda points out in this piece here, because on Monday, factory order activity expanded for the first time. For last month, expanded for the first time since 2022. As it looks like the production manufacturing part of the U.S. economy is starting to come to life. However, tariffs will probably reverse the nascent trend. If history is any guide, during Trump's first term, factory employment shrank and industrial production declined after the duties were enacted. So it's odd timing there.
Yeah, I mean, it's certainly, the manufacturing sector in the country has been really stalled out for the last couple of years. And it's just challenging now to try to envision how it's going to get any better, that this gauge is barely in expansion territory. So it really has been contracting for the most part for the last couple of years. And as much as like the promise of tariffs, the idea from what Trump is trying to push here is that this is going to encourage domestic production and bring factory jobs back. That just hasn't been the economic reality of what tariffs have done. So that's referencing another story that our team put out maybe about a week or two ago, looking at what the tariffs did in Trump's first term and how growth was really such a huge concern, especially at the Fed when this was happening in real time. Of course, the pandemic happened shortly thereafter, and we didn't really get to see this all fully play out, but you could see that business investment was stalling, and just the broader trade uncertainty that this period puts a lot of companies in is also in and of itself a huge drag on growth.
Right, and we didn't have inflation then. We also had the Fed hiking, so it was also just a different world. Can you give us some examples of like a company in the story that Enda worked on that and what they're doing specifically and how they're managing it specifically?
So I mentioned the one that is pausing their investment and hiring plans. I thought that one was really potent to the trend here. There was another one who Enda spoke to at the beginning of the story, that they produce, like cement that's used in, or concrete rather, that's used in highway barriers and roads. and how, speaking of this race to the border to try to get shipments in before the tariffs happen. So just a flurry of calls between clients and executives at this company to really just try to make sure that we're going to beat this deadline. And yeah, again, like a lot of this was happening over the weekend. That's when the tariff announcement first came out. Then Monday, we're going to back off, give people 30 days, figure it out. But you can't just wait and see what's going to happen in 30 days. I think for all companies right now, the idea is very much still that tariffs are coming in some way, shape, or form.
And we heard that from Henry and Tris, right? That like they're coming because we're calculating revenue from them.
Yes.
So it's we don't know where, when, how much, et cetera. All right. Thanks so much, Molly. Really appreciate it. Molly Smith, a U.S. economy editor, looking at some of the manufacturers, the smaller guys, and kind of what they're doing as we head into the tariff world. But the question, and this goes back to Barry, can't price it.
No.
You can price it, and if you do, the pricing only lasts like a day.
Yeah, exactly. So again, it's what we try to do with Barry is just kind of get a sense of what a real money manager is doing. And he's saying he's focusing on the fundamentals, and the fundamentals right now are earnings and the economic data we're getting, and that's what will drive stocks ultimately over the longer term.
Speaking of earnings, AMD, those shares still off almost 8%, for example. Snap also disappointing. Earnings yesterday down by about 5%. Uber off by 7%. Google still off by about 7% as well.
Yep, absolutely. So we'll see. We got some more earnings coming up. We got Amazon after the close tomorrow.
Yep.
And that'll be a big one.
Good thing I remembered that. I said today. It's not. It's tomorrow. Talk about the hyperscaler spend as well. That wraps it up for me and Paul on this Wednesday. Balance of Power with Joe Matthew is up next after this Global News Update.
Thank you, Molly. Okay.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Watching Wall Street and the Trump trade. Welcome to the fastest show in politics as we zero in on the markets today on another busy day here in Washington, D.C. with a special conversation ahead you will only hear on Bloomberg. Jim Chanos, Chanos & Company President, Managing Partner, Founder, in a sit-down with Bloomberg's Scarlett Fu and Romaine Bostick. On the other side of this conversation, we'll set the table for the rest of the day here in Washington on both ends of Pennsylvania Avenue with Mark Champion and our political panel. So stay with us here as we now join, as I mentioned, Romaine and Scarlett live here on Bloomberg.
I want to welcome now our Bloomberg Radio and YouTube audiences as we bring in our big guest this hour. My co-anchor for The Close, Romaine Bostick, joins us now as we sit down for an exclusive conversation with Jim Chanos, President and Founder of Chanos & Company. Jim, welcome back.
Oh, good to be back. Thank you for having me.
You are a born skeptic. Some might even say a cynic. You've built your career on questioning conventional wisdom, what people, what companies say. So when it comes to expectations for Trumponomics and the market under Donald Trump, what is the crowd perhaps getting wrong? What are they not seeing?
Well, I think that and I've been posting that I think the budget cuts are going to be a lot harder than people think. I mean, we're going after kind of the low-hanging fruit, both practically and politically right now, like the USAID stuff. But this is, and it is outrageous as some of the things that the DOGE committee is finding, and I agree that some of them are pretty silly. I think that materially, we're not really going to be able to do a lot until you get to kind of more serious items like Medicare, Medicaid, defense.
The third rail.
And yeah, the hot ticket third rail type stuff. And that's going to be much, much tougher. And so I think we're still in the early parts of sort of political theater on Trumponomics. And then, of course, we have the whole separate issue of tariffs.
And that gets me to the next question. I mean, you look at Trump's policies overall. They're both populist and, as you've described them, standard Republican. But so far, he's chosen to focus on trade war over, say, cutting taxes. So what does this tell you about Trumponomics in this second go-round rather than the first attempt?
Yeah, so, I mean, he obviously came right out of the gate with the tariffs over this past weekend that have been walked back temporarily. So it appears they're serious there. We'll see. The fact that Mexico and Canada kind of agreed to do things that they had already agreed to do. I mean, Mexico had 10 to 15,000 troops on its border going back to 2017 in a promise they made to Trump the first go-around and reiterated with Biden. So again, how much is political theater? How much is real? We'll have to see. The China tariffs, I think, obviously are a lot more serious and are worth watching.
What's the economic risk?
Well, the economic risk, I mean, there's a couple of problems with the message, which is, well, if we charge enough tariffs, we really can eliminate things like the income tax and a lot of other sort of broad promises. And the fact of the matter is, I mean, tariffs, I think, brought in about $80 billion last year. And so, you know, in order for tariffs to replace the income tax, which is about $2 trillion of our $4 trillion in revenues, you got to have a lot of tariffs. So I don't think we're looking at that. I think the question is this being used as a national security cudgel as well as an economic cudgel, or is it strictly economics because they really believe they can raise a lot of money with tariffs? The numbers just kind of don't pencil out.
I am curious, when we talk about the potential overhang of this. I mean, I know in fairness to the Trump administration, it's only been a couple of weeks here, but the idea that now Mexico and Canada have won a 1-month reprieve, at least for investors and economic watchers, that's another month of uncertainty. Do you think we'll get more of a concrete policy, meaning an actual resolution of some form or another that will at least provide some certainty to the market? Whether the market likes it or not, that's a whole other conversation.
Yeah, well, I think drama is part of the message, Romaine. I mean, it was in the first administration. I don't see a whole lot different changing in this. I mean, the one thing you might at least point out in the past administration, for good or bad, I didn't have to check my X feed first thing in the morning to see what was coming out of the White House overnight. And so, we're back to a much more volatile set of political pronouncements and streams and walkbacks, and it's a little more uncertainty.
Well, how much confidence do you have in the people around Trump? Because Trump himself, we know he's just sort of this vortex, but there are some relatively competent people around him, including the Treasury Secretary, who you have some familiarity with back when you were running Kinnikos.
I trained him.
He was one of your first analysts out there.
He was my first analyst.
So you liked him then. Do you still like him now?
I like Scott Bessent an awful lot. We don't share the same politics, but he's a man of real character, and I think he was probably the best man for the job, given the political arena. So I'm hoping he does well. I think he will do well, hopefully, and I know he has the country's best interests at heart.
And you did see him, but you didn't actually get to talk to him about what he's doing right now.
Well, I was able to see him and congratulate him after he got the nod. So he's got his hands full.
You've described the last few years as the golden age of fraud, funny accounting, questionable behavior on the parts of investors, of companies. How would you describe where we are now, given that the lines between government and business are pretty much blurred, more intertwined than ever? You've got Elon Musk running Doge. You've got the president selling his own meme coin. You've got regulators perhaps taking their hands off the wheel completely.
Yeah, I'm hard pressed to think that we're going to see less of it in the near term. It sure seems like we're going to see more of it. Look, this is a cycle the likes of which I've never seen, and the willingness of people to believe things that just simply aren't true, it never ceases to amaze me, particularly as the cycle carries on, and the willingness of management teams now to project way into the future and make all kinds of claims and promises. I think is also sort of unprecedented. It's always been there, but it's greater now. I've always said that bull markets place a premium on promises, and bear markets discount reality. And right now, there's lots of companies making lots of promises.
Lots of promises, but what is the reality? And I mean, and to Scarlett's point, you have some conflicts of interest in some of the folks who are, I don't know if they're in charge. I mean, they would say they're not in charge, but certainly sort of leading the charge in sort of trying to sort of root out whatever they think could potentially be bogging us down here. If you're not a friend of Elon Musk or a friend of Trump,
I think that's fair,
and you're running a company or an investment fund, should you be worried?
Yeah, I mean, I don't know. I don't know how personal it's all going to get to companies and individuals, but but I am concerned that we have this whole new structure set up with people that are basically going in again. And if you read the president's executive order setting up the DOGE committee, which was an existing committee, the U.S. Digital Services Committee, it has no budgetary authority or even recommendations. It's set up as a technology and software consulting organization. So obviously the bailiwick has expanded to be something much greater than that. And the question will be, will at some point a federal judge somewhere say, wait a minute, this is, you're going beyond your purview, beyond your legal.
Does it undermine faith, though, in the system? I mean, particularly when I see people rooting around in the Treasury system. I mean, we can talk about USAID and some of these other things, but the Treasury, I mean, we're talking about the backbone of our economy, the backbone of our financial markets.
Structure. Yeah, I mean, we'll see. And we'll see to the extent when it goes beyond just, aerobic studies about shrimp in USAID and gets into, Social Security and Medicaid payments and things like that. They're really serious. And then I think you're going to see, if there's any pushback, it's going to be pretty serious.
I want to shift our conversation now to the tariffs on China, which you said are going to be much more serious. The U.S. began imposing an additional 10% tariff on Chinese goods, and Beijing's response was targeted tariffs on about 80 products, which hardly seems like a proportional response. What does this reveal? Does this indicate that China has more to lose from a trade war with the U.S. than the other way around?
I mean, the argument for the administration is that they do, right? That China has much more to lose. They're a much more export-driven country. We'll have to see. I mean, I think China probably feels it was proportional, and we don't know what discussions are going on behind the scenes. So I think, again, wait and see. But I think that 10% isn't going to do it, by the way. I mean, getting back to our early conversation about the amount of tariffs you need to raise serious revenues, you would have to raise them substantially on both China and the EU, and we haven't seen that yet. So we'll have to see what exactly comes within 30 days, 60 days. Does it escalate, or does it cool off and it was an early campaign promise that he's delivered on, and now he's moved on to something else?
But at the same time, this comes at a precarious time for China's economy. You've been warning for a long time about China's debt bubble and its broken economic model. What does the imposition of tariffs, now an additional 10%, but perhaps going even higher, mean for that long-term decline?
Yeah, it doesn't help it, that's for sure, because, I mean, China saw fewer reliance on net exports after 2010 when we first put out our warning, and that it's growing again. And part of that is due to the fact that the investment-driven model that we've been crying wolf about forever, albeit correctly, is losing its impetus to continue to grow. And the banking system is still bloated, and we've seen now problems in the residential real estate area completely trickle down into the actual developers. So they've got a model that really now is facing kind of a crossroads with what they're going to do. And the U.S. putting on major tariffs to one of their few thriving parts of the engine, the export manufacturing area, isn't going to help.
All right, a moment of reckoning then perhaps for China. We're going to take a quick break for just a moment. We're going to have more with Jim Chanos, president and founder of Chanos & Company. Keep it right here. This is Bloomberg.
Live on Balance of Power here on Bloomberg Radio, and an interesting conversation to put our ears on as we consider the Trump trade, watching Wall Street every day as we talk politics, and coming off of some of the recent statements by Donald Trump when it comes to tariffs, as you just heard, when it comes to the idea of extending the Trump tax cuts, when it comes to animal spirits. Fascinating to hear from Jim Chanos here. Back to a much more volatile set of political pronouncements, he said. Fascinating to listen to. I'm Joe Matthew in Washington. Glad you're with us here on the fastest show in politics. We do have our eyes on Wall Street, and I want to get to New York, world headquarters, as we always start the program with Charlie Pellet. He's watching the markets for us. Charlie, how are we doing?
Right now, higher across the board. Joe Matthew with the Dow, the S&P, NASDAQ, all solidly in the green. Certainly traders looking past AI jitters. Bonds are climbing. Let's get right to the stock market with the S&P now higher by 11 points, 6,049, a gain of 0.2%. 0.2%. Dow Industrials up 119, up by about 0.3%. NASDAQ up 19. That is a gain of 0.1%. The 10-year at 4.41%. The 2-year currently yielding 4.41%. Spot gold up $32 the ounce, up 1.1%. And West Texas Intermediate crude down 2.1%, 71.15 for WTI. A headline right off the Bloomberg Professional Service. In France, the French premier has survived a no confidence vote, securing a new budget. Again, the Dow, the S&P, NASDAQ, all advancing. S&P right now up 11, a gain there of 0.2%. So again, some of the other stories that we are following for you today after earnings. We've got shares of Alphabet, parent of Google, down now by 7.3%. Advanced Micro Devices also out with earnings. AMD down now by 6.7%. This morning we heard from the Walt Disney Company reporting earnings, with that stock down 1.1%. Uber after earnings now down by 6.7%. Crosstown rival Lyft, both companies based in San Francisco, also trading lower, down by 4.3%. And Lyft will be reporting earnings next week. So bottom line here, stocks bouncing back, gains in several industries overshadowing underwhelming earnings from a number of tech heavyweights. I'm Charlie Pellett. Balance of Power continues. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, we do appreciate it as always. We'll get back to Charlie shortly for his view on Wall Street, as we do each day here on the fastest show in politics. Thanks for being with us. It's the Wednesday edition, at a time when each day feels like a year. On Bloomberg Radio, on the satellite radio, and on YouTube. Find us right now. Search Bloomberg Business News Live. You know, we talk so much about how crazy it is here right now. This is Trump time we're living on. Flood the zone. Like I said, every day is a year. The sage Frank Barnaco suggested, when I was positing how crazy the news business is now, try being on the other side of the speaker. And so I'm thinking of you today as we try to dance through the tulips here as carefully as possible, realizing that we got a lot to cover on a daily basis. Update on confirmations. The Senate made it official, and Pam Bondi has been sworn in as the new Attorney General. It happened a short time ago in the Oval Office. 54-46 was the final vote. John Fetterman, thank you, say the Republicans, the one Democrat who supported her. We'll be watching Kelly Loeffler. She's got a committee vote coming up later on today. And then, of course, we're waiting for floor votes for RFK Jr., for Tulsi Gabbard, for Kash Patel, as Donald Trump continues to assemble the cabinet in what is now the second, well, I guess first full month of the administration. Big questions. We're going to explore this a little bit later on in the program about what's happening on Capitol Hill. Reconciliation. Will we have a budget? We are I'm supposed to remind you, 6 weeks out from a potential government shutdown, even though nobody's talking about a shutdown. That is when we would run out of money. And with the House conference meeting last night, Majority Leader Steve Scalise talking about $1 trillion in savings. Mike Johnson saying the status of the debate is up in the air at the moment when it comes to one bill versus two. We asked Senator Bill Hagerty, the Republican from Tennessee, about this yesterday, because there is a lot of talk now about the Senate stepping up and jamming the House. We've seen this movie before. Here's what Hagerty said.
We know the American public expects us to address the tax package, and we're going to do that. We have a number of other issues that we're trying to address at the same time. How we do it from a process standpoint, I'm much less concerned about. I think the concern is that we get it done quickly, that we get it done efficiently, and I'm optimistic that we will get it done. Despite the procedural back and forth between the House and the Senate, we're going to get it done, and we're very focused on it.
Remember when they were going to figure all this out on the patio at Mar-a-Lago? Then they were going to figure it out at Doral. Now it's back to Mar-a-Lago. Friday night, 2 nights from now, Senate Republicans will gather to urge Donald Trump to stop waiting for the House. Senate Majority Whip John Barrasso, talking to Axios, says he expects the message to be, "It's now, Mr. President. It's time to move. We have this." This will be interesting to watch unfold in the coming weeks with, as I mentioned, 6 weeks to go. One of the other major stories that we're following right now is the future landscape in the Middle East after President Trump's bilateral news conference with Prime Minister Benjamin Netanyahu. That was quite a romp last evening, and there are great questions about what exactly the president meant and if he meant it when he said that the U.S. would take over Gaza. the U.S. will take over the Gaza Strip in what he called a long-term ownership position, having frequently referred to this as beautiful oceanfront property. What happens to the 2 million Palestinians who live there? We'll talk to columnist Mark Champion next on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks bouncing back for the most part. NASDAQ just turning negative, but the Dow, the S&P holding on to earlier gains. Several industries moving higher, overshadowing underwhelming earnings from some tech heavyweights, including Advanced Micro Devices and Alphabet. Alphabet down 7.3%. AMD now lower by 6.9%. Bottom line, NASDAQ lower by 3, little changed. S&P up 6, up by about 0.1%. Dow Jones Industrial Average up 98, higher by 0.2%. The 10-year at 4.42%, with the 2-year 4.16%. Spot gold is currently trading higher by $29 the ounce. We're looking at a record on the precious metal at $28.72, up 1% today, up another 1%. West Texas Intermediate crude slumping 2%, $71.22 a barrel. And Bitcoin up 1%, $97,400. 1,473 right now on Bitcoin. Earnings this morning from Uber. The stock is down 6.9%, issuing a first quarter bookings outlook that disappointed analysts. Rival Lyft down 4.4%. Uber, meanwhile, is setting up a wait list for customers interested in requesting a driverless Waymo vehicle in Austin ahead of a planned launch later on this year. Again, recapping, S&P up 7, up 0.1% for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcasts. Back we go to Washington. Once again, your host. Here he is, Joe Matthew.
All right, Charlie Pellet, thank you again. We'll hear from Charlie a bit later on this hour as we watch Wall Street on the fastest show in politics. The intersection of Washington and Wall Street has rarely been greater as we wait for the next headline on a daily, hourly, or even by the minute basis coming out of the White House today. So will it be Mara Gaza or Gaza-Lago? The question posed by David Friedman, Donald Trump's ambassador to Israel in his first term. The conversation about the U.S. suddenly now taking over the Gaza Strip has captured the attention of people from world capitals. As the president said, the people of the world would live there after it was rebuilt. A jaw-dropping reversal, as the New York Times calls it, and we're back to the do you take him seriously or literally? Mark Champion has a take on this. We're going to talk to him in a moment as we bring you back to the East Room at the White House, a late news conference with Donald Trump and Benjamin Netanyahu. You've heard him flirt with this idea before, beautiful waterfront property, could have great condos, just like he says about North Korea. Here was the president last evening.
The U.S. will take over the Gaza Strip, and we will do a job with it, too. We'll own it and be responsible for dismantling all of the dangerous unexploded bombs and other weapons on the site, level the site and get rid of the destroyed buildings, level it out, create an economic development that will supply unlimited numbers of jobs and housing for the people of the area. I don't want to be cute. I don't want to be a wise guy, but the Riviera of the Middle East, this could be something that could be so bad. This could be so magnificent.
Tough to be cute at a moment like this. Not that you would ever accuse me of being a wise guy. Reaction from the Saudi Foreign Ministry: any violation of the rights of the Palestinian people, whether through settlement, land annexation, or attempts to displace them, rejected. And as Mark Champion writes today on Bloomberg Opinion, Gaza is not a real estate project. He says it's a highly complex 70-year-old territorial dispute made intractable by the politics of identity, religion, national determination, and an accumulated history of violence and hate from both sides. It's quite a piece of writing. You can find it online or on the terminal. Mark Champion is with us now, international affairs columnist at Bloomberg Opinion. It's great to have you here, Mark. You're taking him seriously. Are you taking him literally?
Yeah, I mean, I'm not sure what that, kind of formula even means anymore. I mean, essentially, you've got a president who is big in real estate. His son-in-law is big in real estate. His envoy to the Middle East is big in real estate. And all of them have talked about, for some time about Gaza as a real estate project. So, I think it's actually kind of foolish not to take him somewhat seriously in that he thinks about it in those terms. And I think that's what's rather worrying, because this is an issue of state, not of real estate. And it is extremely difficult to resolve. It's going to take an awful lot of effort. We're just not going to get there if you have this kind of nonsense, which, frankly, it is.
I don't know that we can get into President Trump's head here, and I wouldn't dare do that on the air, but the idea of somehow removing more than 2 million Palestinians is what a lot of people are struggling with here. Yes, Donald Trump says it's a hellhole, but these are people who are not interested in leaving that piece of land. Their neighbors in Egypt, Jordan, and other Gulf states, as you point out, probably are not either. And that's why people are asking about the idea of American troops on the ground. Does Donald Trump think that that's feasible here, to essentially start the massive military operation that would be required?
I find it very difficult to believe that he does. I mean, I have to imagine that, this is in part designed just to, just to distract. There is no real strategy that has been put forward by the Israelis in order to, find some sort of future for Gaza other than, perpetual occupation. And there is no, the Biden administration had a strategy that the Israelis didn't agree with, and it went nowhere. And what Trump is, putting forward here, I think is mainly a distraction. And, this is what I think is quite worrying. The fact is that ethnic cleansing is not uncommon in history. And, we need to be careful about, what is said here. There is, the difficulty with moving people off territory in order to solve problems is that it is, both illegal and immoral and effective. And that has been, the case through history. Many, many cases, unfortunately, where this has been done. So I think we need to, be very careful when we start, listening to, a kind of description of this as, a real estate deal where you just need to move the tenants out. And they'll be better off, in an apartment we're going to build for them, and it'll all be great, and it's all for them. We have to be very careful about that.
Move them out, but apparently not move them back. Mark, Donald Trump was asked repeatedly who would live there. First of all, where would they go is its own question. But who would live there? He replied, quote, "I envision the world people living there." He clarified to say the world's people. "I think you'll make that into an international, unbelievable place." This is where things start to get less serious, no?
Yeah, I mean, obviously he hasn't kind of thought through the market. If you're thinking about it in terms of a real estate deal. I mean, there's another part to this, which is it's pretty obvious who will move there, which is that, the Israelis, there are settlers who very much want to move there. And, that's probably where this would go. But difficult for him, an already impossible thing to sell. Even harder if you start saying, well, we're going to rebuild this thing and make it beautiful, and then it will be, essentially a part of Israel. It's very difficult to, to sort of put that forward, and he hasn't really, sort of joined all the dots there. It does have a very uncertain legal status, Gaza. It's not legally part of Israel. It's not legally part of Egypt. It doesn't have a status as a state on its own. So he's kind of just living in that gray area.
King of Jordan is coming to the White House next week. What's he going to say about this?
Well, I mean, this kind of thing is really, really worrying for Jordan. It's a state that is, the majority of the population, their origin is Palestinian. Jordan has worked really hard to assimilate and to create a Jordanian nationality because they simply don't want to be the Palestinian state, and then to sort of take on all the problems that come with that, an extension of the West Bank, essentially. The population tripled at the end of the 1948 war when Palestinians fled from Israel, and most of them went to Jordan. Many of them went to Jordan, so to have another influx of, say, another 500,000, whatever the number is, Palestinians, destitute, furious. It would be destabilizing. So I think we can predict that the King of Jordan will be very clear in that he does not want that to happen.
Well, we heard such a loud conversation about bringing Saudi Arabia back into the fold as we were wondering what the Oval Office discussions might include, the meeting between President Trump and Prime Minister Netanyahu, that there might be an opportunity here to get back in talks with Saudi Arabia and introduce a new day here, maybe even add to the Abrams Accords. What does Saudi Arabia think about this, and could this, in fact, be enough to stop a deal like that from happening?
Yeah, I mean, it is really interesting, the difference, between Trump's first term, when he was actually extremely successful, and one should give him a lot of credit for it in terms of getting the Abrams Accords. It was a moment when the interests of Saudi Arabia and some of the Gulf states who actually signed the accords, Saudi Arabia was sort of coming up behind and was going to sign it before October 7, 2023 happened. The interesting point there is that their interests are very aligned, the Gulf states and the interests of Israel. They were all focused on the threat from Iran. Since October the 7th, 2023, since the war in Gaza, those interests have started to separate. Iran is weaker. The Saudis are less worried about that. Saudi interests, that for themselves, are very focused on making sure there's enough stability so they can carry forward their economic plans before they had, more just geostrategic goals. Anything that would disturb that is now a problem for the Saudis. And it is very politically difficult for them to embrace the Israelis, to be seen as doing some of the work for the Israelis in Gaza. After this war, it would be, very politically unpopular within their own country. And although they're certainly not a democracy, they have to worry about that.
Kind of you to join us, Mark. Live from London, the headline, Trump's Gaza scheme may be more than fantasy. That's Mark Champion. OPIN Go on your terminal, or look for the column online at Bloomberg.com. An interesting take on some of the language that we have heard over the past 12 to 24 hours. We're going to have a lot more ahead with our political panel. With us today, Jeannie Shanzano and Rick Davis. They are back together. Our signature panel will be up next. Bloomberg Politics contributors with much to talk about coming out of the Trump White House, including, yes, this idea of the U.S. owning, for the long term, the Gaza Strip. Pam Bondi is sworn in. We have a new attorney general. It took place in the Oval Office as Donald Trump makes his way through the cabinet selections. We'll have more on confirmations and the argument over taxes and spending on Capitol Hill, all coming up on the fastest show in politics. This is Bloomberg.
1240 on Wall Street. We do check markets all day long here at Bloomberg. U.S. stocks bouncing back, but the NASDAQ Composite Index just turned lower, right to the numbers, with the S&P up 7, higher by 0.1%. Dow Industrials up 125, up 0.3%. NASDAQ, though, in the red, moving lower, down by about 8 points now, down less than 0.1%. We did get underwhelming earnings from a number of tech heavyweights last night. Case in point, Alphabet down now by 7.2%. Advanced Micro Devices also down 7.2%. 10-year 4.42% with a 2-year 4.17%. Gold is up $30 the ounce. Gold trading at a record $28.73, up 1.1%, while West Texas Intermediate crude is down 1.9%, $71.30 on WTI. Certainly tariff risks remain at the forefront as President Trump has a phone call scheduled with Chinese President Xi Jinping. They'll be talking trade. Michael Townsend is Managing Director for Legislative and Regulatory Affairs at Charles Schwab.
China's a longer game. It's going to be a longer game. We always knew it was going to be a longer game. So, when he says, I'm not eager to make that happen in the first 24 hours, although he did originally say that he was going to do it in the first 24 hours, I think that's where he's coming from. He understands this is a much longer game with China.
Michael Townsend of Charles Schwab interviewed this morning on Bloomberg Surveillance. Earnings news, motorcycle maker Harley-Davidson reported revenue for the fourth quarter that missed the average analyst estimate. Harley-Davidson shares trading lower now, HOG on the ticker. It is down by 1.75%. And Tesla sales plummeted 59% last month in Germany, where CEO Elon Musk asserted himself in national politics like never before. Tesla shares trading lower right now by 2.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your host. Here he is, Joe Matthew.
Okay, Charlie, thanks as always. Watching Wall Street for us here on Balance of Power. I'm Joe Matthew in Washington. Good to have you on Bloomberg Radio, on the satellite, and on YouTube. Search Bloomberg Business News Live. If you're not already a part of this, give it a try. Put it into Google, put it into YouTube. You'll find our live feed. It's running all day from New York and Washington. All of our shows here on Bloomberg Radio, suddenly on camera. Starts every morning with Paul Sweeney and Tom Keene, and we roll it right through Bloomberg Business Week. And it's one of the coolest things that we have going. Be part of it on YouTube. Looking at the guidance from the White House today, we're going to be hearing and seeing from Donald Trump. We did see him a little earlier. Pam Bondi was sworn in as our new Attorney General. He's meeting with the governor of Texas, Greg Abbott. He's going to be signing another executive order today. No men in women's sports. Into law, it says, in the East Room. Then meeting with the governor of California, Gavin Newsom, to be a fly on the wall. We will get a White House briefing along the way. It's what the president said last night, though, and this was long after a lot of people got home and started eating dinner and not paying attention to the news. Following a long day of conversation with Benjamin Netanyahu, the president did, a couple hours late, come out for a bilateral news conference in the East Room. That's why you're hearing so much about the Gaza Strip this morning. We will own it, he said. Quote, the U.S. will take over the Gaza Strip. I do see a long-term ownership position, and I see it bringing great stability to that part of the Middle East, maybe the entire Middle East. You've heard Donald Trump talk about the beautiful waterfront property that he sees on the Gaza Strip. Could be the crown jewel of the Mediterranean, he says. The opportunity to build condos there, not unlike the opportunity in North Korea. This one hit a little bit differently, though, and we heard from world leaders across the Middle East and from U.S. allies on this, who aren't sure what to make of it. Removing more than 2 million Palestinians from the Gaza Strip, potentially against their own will. That's where we start our conversation today with our signature panel. I'm glad to say they are back together. With Jeannie Sheehan Zaino, Bloomberg Politics contributor, Democratic analyst, and senior democracy fellow with the Center for the Study of the Presidency and Congress. Republican strategist Rick Davis, Bloomberg Politics contributor and partner at Stone Court Capital. Rick, we missed you for a couple days. I'll start with you. From the seriously versus literally file here, is Donald Trump trying to get to something else by suggesting the U.S. actually take ownership of the Gaza Strip, or is this the reversal of all time when it comes to nation building and getting involved in foreign wars?
Well, I mean, I don't think that's mutually exclusive. Yes, it is the reversal of all time. It's hard to find any evidence of him discussing this over the last 8 years. The reality is it's a total repudiation of his America First policy that he talks about all the time over that same period of time. So you wonder, sort of scratch your head, where'd this come from? The reality is there is a reconstruction phase in the latest ceasefire agreement that was negotiated to be able to allow some of these hostages to be released. But it's nothing like what this is described. I mean, look, we know Donald Trump is a love the one you're with, right? And Bibi Netanyahu shows up, right? Head of Israel, and like Donald Trump wants to make sure he's got the welcome mat out. And so what could be more welcome to Bibi Netanyahu than move every man, woman, and child out of Gaza, find a nice spot for them, build them some nice condos, as Donald Trump said yesterday, and then totally construct Gaza into the Riviera of the East. So the reality is, you really wonder how much of this is thoughtful, how much of this is actually a plan. I mean, in the first term of Donald Trump's administration, he had a two-state solution negotiation going on. It is official policy of the United States. I guess you need some real estate in order to have a state.
I guess so. The proposal would involve a massive development project here, Jeannie, not only, as he says, cleaning the Gaza Strip, but removing massive amounts of undetonated explosives, arms that have been left over. Trump officials had said earlier in the day could take 10 to 15 years. I thought we were trying to cut government spending. What would that cost?
Yeah, don't worry about that, Joe Matthew. That's for another day. And I just see that producer James says that Scott Turner was confirmed as Secretary of Housing and Urban Development. So maybe Donald Trump was setting him up so his work would involve the Gaza Strip. I mean, it's really hard to know at this point. There's so many questions about this. I kept reflecting on, he is like Robert Moses and Robert Caro's the power broker at this point, but not just for New York, for the world. Wow. He has just set up this sovereign wealth fund, if indeed it gets set up via EO. So maybe, to Rick's point, he likes to think about what's going on in the moment. Sovereign wealth funds, you usually need something to do with that money. What better than to displace 2.2 million people and build the Riviera? I mean, the whole thing is, it's stunning. Netanyahu's bemused look on his face was priceless yesterday. But this is 21st century colonialism. It is ethnic cleansing. It is a non-starter. It is a historical. It is a political. And there's hardly anything else to say about it.
Well, indeed, Scott Turner has been confirmed as our new HUD secretary. I bet you can, Jeannie, but we all know when producer James says something, that's gospel. That's the credibility around here at Balance of Power. And he is, in fact, the producer of this program. Can you get, James, say hi to everybody. Does that speaker work? He's a real person, You'll never see him, but you can hear him, right, James? No, in the overhead. You can do it in here, right? Give me voice of God. See if it works. No, see if it works. He knows what button to press. So, Rick, the idea here of turning away from a massive cost-cutting project by way of Doge, by way of Elon Musk, closing federal agencies, but opening a massive investment like this in the Middle East doesn't seem entirely practical or on brand for this administration right now. Is there something else that Donald Trump is getting at, knowing that the King of Jordan will be in town next week, knowing that talks with Saudi Arabia could resume soon with Israel?
Yeah, it's obviously a complication in all that. Remember, Donald Trump is saying that the U.S. would own the property, and so maybe his idea is to bring in all his developer friends. Jared Kushner, his son-in-law, talked about developing Gaza years ago to a interviewer who was talking to him about the future of Abraham Accords and things like that. So maybe there's a family business concept to this, right? Nice, big, beautiful Trump Tower, on the Mediterranean and Gaza. It's hard to tell. And the reality is we have to assume there is no plan until at which point a plan is made public. But I think it's a distraction. They're into, sort of laying down a lot of slick here, right? Since the day he was sworn in, and frankly, go back to even during the transition, they have dominated the news cycle by just unloading everything they can possibly think of. And you have to give the Trump administration credit for being organized enough to create this much activity in this short a period of time. I mean, you know, all this gray hair is a representation of having been around the block here for 40 years. And I do not remember a single administration, Republican or Democrat, that came in with more expansive of a plan, more personnel under employ initially, and the ability to execute that plan in the first wave. I mean, not even a month into this administration, and we are inundated with activity, whether it's the DOGE cost cutting in all these agencies, to the reorganization of major agencies, to the kinds of foreign policy moves on trade and security that he's made. You really wonder what it's going to be like, in March or April if you have this pace of activity here in January and February.
It does seem like they had quite a plan cooking here. Jeannie, you might even refer to Project 2025. We're actually going to have one of the authors of 2025 back with us here, the president of the Heritage Foundation, next hour, Kevin Roberts, in a follow-up appearance here on Balance of Power. It wasn't just 2025, though, was it? I mean, Donald Trump, before he took office, clearly had a team of people working around the clock to prepare hundreds of EOs to suggest any number of ideas to get in front of the news, to do things differently at the White House, to kind of disrupt the news flow to the point where, like Rick is suggesting, everybody's flat out. Forget shock and awe. This is a new level.
It is. First of all, did Rick Davis just say slick or something like that? Is that what I heard? I couldn't understand that lingo.
He's
for
laying
him.
down a slick.
Yes, they have come well prepared. I love to talk about Project 2025, so I am going to be hanging on every word of that as I was last time. The thing that I think we need to think about here is, number one, yes, they did have 4 years to prepare on this, and Project 2025 is a representation of that. But in the case of what Donald Trump was talking about yesterday, about U.S. ownership of the Gaza Strip, I am really concerned, and I wish somebody would answer to me, who came up with this policy? Because you are hard-pressed to find anybody who studies the Middle East or who studies this conflict who would ever come up with such an idea. So for all the preparation and all the news that they are making with the EOs and everything else, there is a big question about how policy is being made here. And on the EOs yesterday, when he came out in his, rolling press conferences about the EOs while he's signing and all that stuff, there was the one time when Peter Doocy asked him about Iran and what might happen if they took a shot at him. And he said he has set up a plan to obliterate Iran should that happen. I mean, the entire thing, you watch it and you can't help but just be, it is like you're watching a bit of the Veep or something like that. And then you have to step back and say, oh, wow, this is really the president of the United States. This is real life. Where is this letter to obliterate Iran? What is he talking about? None of that is answered. So plans, yes, but I'm not sure about rollout.
Well, I've been asking since early yesterday, where's Jared? Is Jared Kushner in Washington? Does anyone know? Have we seen him last 24 hours? I don't think he was in the East Room, but he could be in town. Times of Israel with the headline, Kushner reportedly behind Trump's proposal to take over Gaza. He's talked about waterfront property. We know he's a developer. This isn't exactly new. Rick, is Jared Kushner behind this whole idea?
It's hard to tell, but he certainly talked about it in the past. And he did an interview previously at Harvard University where he talked about it. So I think Jared Kushner is an expert on the Middle East. I mean, he was the author of the Abraham Accords. He put those together. Yeah. He's made more progress in the Middle East than most Middle East experts have done in 50 years. So I don't underestimate Jared Kushner and the Trump administration's ability to get things done in this region. I mean, it is the one major success story on a foreign policy basis that his first term had. And so, I mean, yes, it's new coming from Donald Trump, but it's not new coming from one of Donald Trump's family members. And we know that regardless of whether or not Jared and Ivanka are part of the administration, they are enormously influential with the president, and they talk all the time.
That's Rick Davis. He's back together with Jeannie Shanzano, our signature panel. I'm glad to say they'll be back in our second hour with much more to talk about on Balance of Power. Kaylee Lyons is on the way in for hour 2. Stay with us on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Will the Senate jam the House? Welcome to the fastest show in politics as attention shifts to the upper chamber to potentially craft a tax and spending reconciliation plan with just 6 weeks until a funding deadline arrives. I'm Joe Matthew alongside Kaylee Lyons in Washington. Welcome to the Wednesday edition of Balance of Power. Kaylee, the idea of what Donald Trump calls one big, beautiful bill may be facing its real test right now.
Yeah, it certainly is. The House was supposed to start marking things up this week in terms of a budget. Doesn't look like that's set to happen, which is why we're questioning whether it's actually the Senate that might be able to move first. Keeping in mind, the Senate and its leadership under Majority Leader John Thune has been pushing for a two-bill strategy, addressing things like the border first, getting to taxes later.
Some, like John Barrasso, are talking a pretty big game as well ahead of a meeting at Mar-a-Lago on Friday night. They say, let us take this, we'll get it done. But of course, Speaker Mike Johnson might see it a bit differently.
Yeah, and you have to wonder how the likes of, say, Elon Musk will be factoring into these conversations as well. If we're fundamentally talking about spending and budgeting here,
yes, right.
And Doge is hard at work trying to trim a lot of fat very quickly, it's kind of putting all these different puzzle pieces and different personalities, frankly, together.
We're going to talk to one of those personalities, Frank Lucas, Republican from Oklahoma, Financial Services Committee. We'll get his take in just a moment.
Yep, he'll be joining us live from Capitol Hill. But first, we go live to New York, where Charlie Pellet has a look at the markets for us. Hey, Charlie.
Hi, thank you very much, and good day to you, both of you. We have got the Dow, the S&P, they're both higher. NASDAQ in the red right now. Little change right to the numbers with the S&P up 8 at 6,046, up by about 0.1%. The Dow up 139, now up 0.3%. NASDAQ, the composite index, in the red, little changed, down less than 0.1%. The NASDAQ 100 index up 0.2%. The 10-year at 4.41%. The 2-year 4.17%. Spot gold is surging $30 the ounce, up another 1.1%. $28.72 on spot gold. West Texas Intermediate crude down 2%. $71.20 for a barrel of WTI. One other commodity note, something we don't talk about that often. Coffee, Arabica coffee reaching a record $4 a pound as supply worries mount. After earnings, Google, Alphabet down 7.3%, Advanced Micro Devices down 6.9%. Balance of Power continues now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet with an eye always on the markets. Thank you so much. And Joe and I always have our eyes on what's happening on Capitol Hill and the way in which a legislative path forward for Congress, together with the Trump administration, is shaping up. It was actually at this hour yesterday that we were joined by Republican Senator Bill Hagerty of Tennessee. And Joe pressed him on whether or not it was the Senate or the House that was actually going to take those first baby steps. This was his answer.
We know the American public expects us to address the tax package, and we're going to do that. We have a number of other issues that we're trying to address at the same time. How we do it from a process standpoint, I'm much less concerned about. I think the concern is that we get it done quickly, that we get it done efficiently, and I'm optimistic that we will get it done. Despite the procedural back and forth between the House and the Senate, we're going to get it done, and we're very focused on it.
We bring in a member of the Republican Conference in the House now, Congressman Frank Lucas, Oklahoma's 3rd District. It's great to have you with us, Congressman. Thanks for joining here on Bloomberg TV and radio. Our viewers and listeners should know that you have represented that district since 2003. And you've been through a couple of funding battles here, and I realize the concept of reconciliation is nothing new. So give us your voice of experience on this. The idea of marking up a reconciliation bill this week in the House appears to be out the window. How is this all going to work? Is it one bill or two?
Well, first of all, I actually go back to 1994. I was here for the last 7 months of the old Democratic 40-year majority. I was a part of the revolution of 1994. I think the question becomes, do you want a base hit or you want a home run? The issues that are being talked about by my brethren in the other body would basically be a base hit. It's the tax policy questions that really matter for the long-term economy. If we run one bill, we get it all done. That's a home run. But I'm practical enough to know whatever the leadership decides, I'll be a part of, because I want to make sure we don't let a massive tax increase take place immediately.
Well, Congressman, I guess the question is whether this is really up to leadership or if this is more about what it's going to take to appease the Freedom Caucus.
Well, we have a 2-seat majority in the United States House of Representatives in the Republican Conference. Soon we'll have a 1-seat majority. That's about as thinly as you can slice it. It makes the Senate's 3-seat majority look like a huge majority. And we have factions within our conference who have various agenda items. But the bottom line is this. If we don't extend the Trump tax relief from 2017, if we don't do the border issues, if we don't address the whole package, we're going to pay a price for it on down the road. I know the Senate's a different place. I respect them greatly. But I know in the House, we need to do it. We need to do it one time and be done with it. because of the environment we're in over here.
We've got a funding deadline 6 weeks away, Congressman. Are we going to be in a world a month from now where we're talking about another continuing resolution to kick the can so all the rest of this can be written?
I hope not. I wanted to finish funding out the government last December and not go through this gyration again. But funding the government is much like passing the budget resolution, much like dealing with budget reconciliation. We have a force that is available to us that we haven't had in a long time. It's called President Donald Trump. And when he engages on any or all three of these issues, I have to believe that my naysayer friends, and there's one or two of them in the conference, will see the light and will move forward together. Because if we fail, it makes it more difficult for the president. And the president doesn't accept failure. We all know that.
Well, I do wonder to what extent this is really just about President Trump and about you and your colleagues in Congress and the executive and legislative branches working together. If this ultimately is about budgeting and spending in the U.S. government, what role is Elon Musk playing in these conversations, considering how quickly he has been trying to move at Doge?
I think all the factors are moving together, and Doge is a classic example of trying, in the spirit of Trump 47, to make a dramatic difference. Anyone involved in business knows that ever so often or ever so many years, no matter the size of the corporation or the private enterprise, you bring in the efficiency experts. You look at everything, you sort out all the cobwebs, you make adjustments to keep the enterprise moving forward. I see that as what Doge is all about. Now, there have been lots of discussion about what Doge has access to. And I was in a conversation with a number of other members with the Secretary of the Treasury on Monday evening, and it was made quite clear to us that the Doge people have the ability to view lots of things. They don't control those things.
So as long as it's a read-only status, you're comfortable with Elon Musk not having been confirmed by the Senate, not being an actual government employee, having access to that information, even if it does not involve stopping payments?
I'll just say that Elon has the confidence of the president. The president clearly on Election Day had the confidence of America, and I believe that my Republican colleagues in the House and the Senate need to be very respectful of that situation. Will we agree with everything he does? Will everything he proposes, I should say, actually become law? No. This is the legislative process. But he's going to lay out before us, I believe, a set of issues and circumstances that need to be addressed. Again, just like any good consultant brought in a business enterprise to make sure it's running efficient.
Well, and as you say, Elon Musk has the confidence of the president. Should he also have the confidence of the people in Oklahoma's 3rd District who may be wondering about Elon Musk and those close to him seeing their personal, sensitive financial data and information?
Well, the people in the 3rd District of Oklahoma overwhelmingly, not unanimously, because that's not the way this country works, the people in Oklahoma have tremendous confidence in President Trump. And again, we'll see how this process evolves. As long as it's viewing, as long as it's making recommendations, as long as it's not turning the switches on and off, how can you argue with trying to make things work better? Now, along that lines, I'm a part of a task force dealing with the Federal Reserve System and Treasury's liquidity issues to try and make sure those issues work more efficiently.
If it involves closing a federal agency, however, and that could be USAID or the Department of Education, we're told, is the next target, Congressman, does the House of Representatives, does the legislature need to have the final say on that?
I'd say ultimately we will have the final say on whatever happens, because all of the actions so far have been challenged very aggressively in court, all the executive orders. That's regular process, that's regular order. We'll work our way through that. Ultimately, good recommendations, even if the courts stop the executive orders, we'll still have the ability to legislatively address that. Now, we have a simple majority, 1 seat in a few days, maybe back to 3 seats or 4 seats by the summer. The Senate still has that 60-vote cloture rule to deal with. Again, that's why we need a budget resolution and reconciliation, and not just 1, but maybe 3 reconciliation bills in this calendar year to move legislation. This is not a checker game we're a part of. This is a chess game, and we have to be prepared to move the pieces carefully to accomplish what needs to be done.
3 bills would certainly be something to behold. Congressman, you mentioned that you are leading this new task force on monetary policy and treasury market resilience. Have you had a chance to speak with Fed Chair Jay Powell, or will that wait until he testifies before the Financial Services Committee next week?
Well, I'm having ongoing conversations with a lot of people on a regular basis, and we are working with Chairman Hill, who chose to create this, and I appreciate the opportunity to lead it, and the members who've been named to the committee as we work through all of this. Bear in mind, it's not just a review of monetary policy and the Federal Reserve System. We're not going to argue about interest rate setting. It's the policies and the laws since 1913 that make this process what it is. But we're also looking at Treasury's ability to keep the debt, the bonds, the bills, the notes moving. And in the last, 20, 30 years, we have half as many market makers as we used to have, but yet we're moving 8 times as much paper. One bad Treasury sale sets off repercussions that my folks back home don't even have a clue what the net result will be. That's what we're looking at making sure does not happen. A fluid, liquid, rational market in government securities.
Well, we look forward to hearing more about how that work develops. Republican Congressman Frank Lucas of Oklahoma joining us live from Capitol Hill. Thank you so much. And I believe kind of throwing out a new number in the reconciliation bill conversation, not just 1 or 2, 3 bills.
We'll be here for it if that happens.
Yeah, and our political panel will be as well. Our signature one at that, Rick Davis, Stone Court Capital partner, and Jeannie Shanzano, Senior Democracy Fellow at the Center for the Study of the Presidency and Congress. Rick, as we're all here playing the 1-2 game, should we be throwing new numbers into this equation?
Yeah, this was a bit of an interesting interview there, guys. First Republican in the House that I've heard who chairs a committee that we should pay attention to, saying that he's probably going to see multiple reconciliation bills. I know that the committee chair on Ways and Means wants one big, beautiful bill, and the speaker wants one big, beautiful bill. So it'll be interesting to see if anybody in the leadership hears this interview and calls up Frank and says, hey, what in the world are you talking about? 3 reconciliation bills. Look, I think that the House Republicans are on their heels. He aptly described the fact that the margins are so thin, they can only govern with 100% of their majority, toeing the line, and they don't have it. I mean, they're not even close. They're, many dozen votes probably short of being able to do one big, beautiful bill. So my guess is they'll struggle with that continuing through the balance of this week. The Senate will continue to push their bill through. They've got a little more comfort, as Frank mentioned, and you're going to see the Senate sort of take over the agenda here and start pushing their 2-bill strategy that is highly likely to succeed, certainly in the Senate.
Well, we heard from Congressman Smith. Let's hear from the chairman. It was on Bloomberg Surveillance this morning. You want the view of the House? At least we thought it was. Here you go.
The House is focused on one big, beautiful bill. It's the Senate that continues to say that they're going to do 2. But I would just remind all of my colleagues, look at history. It has been 38 years since 2 different reconciliation bills were signed into law in the same year. We have the smaller majorities in the House of Representatives now than in the history of Congress. Why do we think we can defy those odds is beyond me.
Well, so Jeannie, based on what we just heard from Frank Lucas and what we have heard from John Thune and those in the Senate, is the call coming from inside the House or not?
Please tell me that some great Bloomberg reporter is on the Hill right now replaying your interview with Lucas for Smith, and we can get his reaction of his head blowing off when he hears it's worse than 2 now. In fact, it may be 3 at this point. I happen to think he is right. When you look at the history here, which is all we can go on in these predictions, with a majority or a margin this small in the House, the idea that they could do this more than once, really defies history. The idea that they could do it twice, maybe, but 3 times is going to be really, really tough. And they know this. I mean, this is what Mike Johnson signed up for. He still has the hardest job on the Hill trying to negotiate this forward. But The problem is, as we look at these numbers, they are still very, very far apart. When you look at what the conservatives are saying, you know, sometimes 4 to 5 trillion versus what we're hearing from the moderates, which is a much more moderate, as you'd expect, you know, 500 billion to $1 trillion. So can they do this? Yes, but it is going to take a lot of work. And the problem is, as usual in the House and the Congress as a whole, the calendar and the, you know, really the clock doesn't work for them well here.
Well, and this is just on reconciliation, let alone keeping the government funded beyond mid-March or raising the debt ceiling, which is going to be required in the next few months here. Jeannie, historically, you would probably see bipartisanship and Democrats playing ball on those things. Is that going to happen this time around?
It's such a good question, Kaylee. I was just listening to Kristen Gillibrand talk to some of her constituents. And I have to say now, you know, this is not a broad swath, but just, you know, people talking to her, they are very critical, the base of the Democratic Party, for Democrats going with the White House, even on some of these nominations. So when you talk about supporting them as they try to keep the government open, I think Democrats are going to have a very tough time doing that, given that the president is going full hog in shutting down programs they care about and what he has done in the last 2 weeks. So I think the pressure is going to be on Democrats not to go along. They're going to say, Republicans, you're in the majority. You do this on your own. You own it. And then, of course, the numbers don't work for Republicans. They're going to have to negotiate, and they're going to have to give Democrats some of what they want. But, you know, you're hard to press to see how that can happen at this point.
So, Rick, does all that make a shutdown in March more likely?
Hard to tell. I mean, I think it's a little bit premature. I think there will be a Senate bill, and I think that it'll be interesting to see whether or not Republicans can hold their caucus together to do it. It may require House Democrats to go along, and what are the givebacks for that? And we've certainly seen bipartisan reconciliation bills in the past. And so the question is one in the mix here? But look, I mean, you know, sure, Chairman Smith's right. I mean, like, we rarely do 2 reconciliation bills, but we used to rarely do reconciliation bills. So, like, where's the regular order that the House leadership promised us as part of their slate to get elected in leadership? How many of the appropriations bills are currently being worked on for next year? I mean, you know, it's just, we're going to extend the do-nothing Congress from last cycle to this cycle. Trouble is, their party in power running for re-election in a year, and if they don't get their act together, they better plan on having other alternative employment.
Right. And then Elise Stefanik makes it 1, right? There'll be a majority of 1. Rick Davis and Jeannie Shanzano, our signature panel, back together again today, guys. Thank you so much, as always. Rick is partner at Stone Court Capital, our Republican strategist. And, of course, Jeannie is our Democratic analyst, Bloomberg Politics contributor, political science professor at Iona University. Project 2025 came up a couple of times over the past 24 hours here with regard to what the Doge was doing, whether this aligns or not. We're going to talk ahead with one of the authors.
Yeah, the president of the Heritage Foundation is on his way into the studio. Kevin Roberts will be here with us next on Balance of Power. Have a lot of questions for him now that we're a little over 2 weeks into this administration.
That's right.
And that's straight ahead right here on Bloomberg TV and radio.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are bouncing back as gains in several industries overshadow underwhelming earnings from some tech heavyweights. Right now, we've got both the Dow and the S&P advancing, but NASDAQ is trading lower. The NASDAQ Composite Index now down by 14 points, a decline of 0.1%. The S&P 500 Index higher by 9, up 0.2%. Dow Jones Industrial Average up 159 points for the Dow, a gain of just about 0.4%. The Russell 2000 Index of small cap shares up now by 0.9%. The 10-year at 4.41%, with the 2-year currently yielding 4.17%. Spot gold up $27 the ounce, $28.69. Looking at records on the precious metal, up by just about 0.9%. West Texas Intermediate crude slumping 2.2%, $71.10 a barrel. The Walt Disney Company reported fiscal first quarter results that topped analyst estimates, fueled by the blockbuster film Moana 2 and higher income from its streaming services. But today, Disney shares are lower by 2%. And Match Group has named Zillow Group co-founder Spencer Rascoff as its CEO, replacing Bernard Kim, who has struggled to end a persistent decline in subscribers to the company's flagship dating app, Tinder. Right now, Match Group down 7.4%. Recapping, S&P higher by 9, up 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington once again. Your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. I'm Kaylee Lyons alongside Joe Matthew here in Washington, where things have been moving pretty quickly in the last 2 weeks and change, keeping in mind it has only been 16 days since Donald Trump was inaugurated as the 47th president of the United States, and very quickly, through executive orders and other means, has gotten to work on things he promised on the campaign trail.
That's for sure.
And some of that not just executed by the president, but by those close to him, including an unelected, unconfirmed by the Senate, Elon Musk, and the Department of Government Efficiency.
What do they call a special government employee?
Yes.
Which gives you a certain period of time to do your thing, but he has not been, of course, confirmed by the Senate, which is why we've been asking some folks if maybe that should change, considering the level of access that he has. We've also heard the Project 2025 come up a number of times. The thought that it was a roadmap for what we are seeing now, because this was a team that was ready. You talk about flooding the zone, hundreds of EOs. He's going to sign another one later today. Not to mention some of the sort of proposals that we've heard the president float here, which is why it's a great opportunity to spend time with Kevin Roberts. He is back with us here on Bloomberg TV and radio, the president of the Heritage Foundation, one of the authors of that document, The Pride of Lafayette, Louisiana. It's great to see you. Welcome back.
It's kind of you to say that and kind of have me back.
That by all means. So I'm curious to hear a lot of stuff from you today. Number one, how you're dealing with the fire hose, the shock and awe here. Is this what you foresaw? And to the extent that you're kind of squinting your eyes, looking at the campaign and looking at the new administration, the document that you crafted has quite a bit in common with what we have seen over the past couple of weeks, hasn't it?
I look at this as a historian. I was educated as an early American historian, and I'm hard-pressed to think of another American president who has started with this pace. It really is, from a conservative policy point of view, to your question, Joe, shock and awe. To be clear, President Trump and Vice President Vance deserve 100% of the credit. It is those two men and the great men and women they've assembled, I think what will be the greatest cabinet in modern American history, who deserve all that credit. I think the conservative movement, to your question, understood that we needed to be much better prepared in serving this president than we were the last time. And to the extent that any of us, whether it's us at Heritage or a million other conservatives, had some tiny role in suggesting a menu of options, that's fine. We've done that at Heritage for 45 years. We'll do it for the next 145. But Trump and Vance deserve credit for this moment.
Has anything, though, that we've seen take place in the last 2 weeks and change not aligned with that point of view, with the American leadership picture that was outlined in those 900-something pages?
The real thrust of the work that we do at Heritage, as you know, is to articulate an aspirational vision for revitalizing self-governance, restoring freedom to the American people, as President Trump said in his inaugural, a revolution of common sense. And there is no exception to the fact that everything that he has done up to this point is going to do all of those things. Heritage stands ready, not just to help with these executive actions from the outside, obviously, but very importantly, considering another aspect of our work, and as you've been covering in your show, making sure that our legislative leaders pass the necessary attendant legislation to amplify the successful executive orders that have happened up to this point.
Well, connecting the dots there is going to be an interesting challenge, and I'd love to hear more from you on that. But it sounds like you're happy with what we're seeing from Elon Musk, this individual who has been thrown in the middle of this whole thing. A lot of people in the first Trump administration and now the second said they voted for Donald Trump because they wanted somebody to come to Washington to break it. I don't know if that kind of creative destruction or whatever you call that sounds like the right answer to you, but is Elon Musk, is the richest man in the world, the guy to do it?
Creative destruction is precisely what Washington needed, and we are celebrating at Heritage the first phases of the unearthing of the grift and corruption that has happened in this city that, of course, is bipartisan, but a bipartisan problem, but also is something that for all of us who want transparency, regardless of our politics, it's a good thing that happens. And I think that in addition to the creativity that Donald Trump himself brings to the office, the innovation the vice president brings to the office, that having someone with the success of Elon Musk to be a partner in this is really good. And I find it sort of comical, not suggesting that you were saying this, Joe, that all of the chatter, say, from House and Senate Democrats about Elon being unelected never was observed about George Soros or Alex Soros. And they, of course, with their creative destruction, have actually destroyed American institutions. The Trump-Vance revolution that's 2 weeks in is actually restoring those.
Except that there is congressional constitutional roles in things like appropriations that it does seem Elon Musk might be stepping on in his blanket, say, push to unauthorized USAID, get rid of the agency or move the agency, which is something that usually would take a congressional act. Do you not see lapses with what is in keeping with the U.S. Constitution and what is happening here?
No, I don't see lapses. In fact, I see the opposite. I see that what Musk and Trump and Vance are doing is correcting what have been lapses by the radical left, actually worse than lapses, I dare say, intentional desires to totally ignore the Constitution by creating a fourth branch of government, the administrative state, that sees as itself more important than any president of the United States. And all of this is a corrective to that. But to the heart of your question, there also has to be a legislative season. And that legislative season is going to be much more successful if the House and Senate, as we heard from on your show from one important figure here, Jason Smith, gets going on the substance. At Heritage, we're agnostic about the number of bills it takes to get this done, but the sooner they can deliver on closing the southern border, on ending the ridiculous overregulation of the American economy, on extending the Trump tax cuts, I think the more that we will see these dots being connected.
How about cutting spending in that reconciliation plan? We had heard a Freedom Caucus that wants $2 to $3 trillion to emerge out of this bill. Steve Scalise came out of a meeting last night saying it's $1 trillion. Are you about to be disappointed on this number with a Republican majority of 1 in the House?
I think that it's a very difficult mathematic problem in two ways, as you know. Not just the budget itself, but also the math in the House. And Speaker Johnson and Leader Scalise have their work cut out for them. Having said that, the most important math problem that the American people have is that as the government continues to spend more money than it possesses under both Republican and Democrat administrations, the American people with their own dollars are able to afford less and less. That's the number that that Heritage and all of us are focused on there. We understand that it might take a couple of bites at the apple in order to get this done. The first bite at the apple needs to be the most aggressive so that we can actually change that overspending trajectory.
Russ Vought, who, of course, you know quite well, tomorrow night is expected to be confirmed by the U.S. Senate to be the new OMB director. And given what already has taken place at the OMB in the last week and change, the lawsuits that have followed from confusing messaging around a funding freeze, are you worried that he's inheriting a bit of a problem right when he steps into the job around that ongoing lawsuit, around the needing to navigate with Elon Musk and the Doge as well? What is he walking into?
Great question. I know Russ Vought very well. He's one of the great statesmen of our age, and I've never seen any problem, any dilemma that Russ is not up to the task for. Having said that, I think what he's walking into is a tremendous opportunity to correct the over-regulation, the overspending, particularly of the last 4 years, but also of the last several administrations. And not only is Russ up to that task, but I think, as I would argue, members of both political parties in Congress see Russ and his team in action, they will see that all they're doing is delivering on the will of the people with a sophistication and intellect that probably has not been in that office until the last time Russ was OMB director.
Has he been talking with Elon Musk? I wouldn't want to have to fit in the same room as Elon Musk. We've already seen an executive order stopping federal grants, federal aid. People at USAID have been put on leave. If you're running OMB, don't you need to have some say in this?
I assume that they're talking about that. There's no doubt in my mind that Russ will have say in that. That's all the more reason that he be confirmed as quickly as possible.
I want to ask you about something else that took place at the White House yesterday, which was a meeting between President Trump and Israeli Prime Minister Benjamin Netanyahu, and a joint news conference that followed, in which the president suggested that the U.S. take over Gaza, that the Palestinians currently there be moved, and essentially the U.S. and U.S. troops help lead what would be a redevelopment project. And I do wonder what your view is on U.S. involvement in the Middle East in that kind of way, when we heard the president on the campaign trail repeatedly saying he doesn't want to see forever wars.
Contrast what Trump said yesterday and what have been related actions by his administration with the utter incompetence and fecklessness of the previous administration. I say that not as a partisan, which I'm not, but as a historian of American politics. And the contrast could not be more beneficial for free people on the planet, all free people on the planet.
Palestinians included?
Absolutely. And I think what we're seeing from Trump with this comment yesterday about Gaza is the reinsertion of the American presidency and of America generally as having moral clarity in that region and around the world. We trust fully the details that President Trump will come up with regarding what we do with the Gaza Strip, with the Middle East generally. And I think over time, passing days, passing weeks, as more and more people across the world enjoy peace because of Trump's moral clarity, we will understand that that kind of courage is precisely what's been lacking over the last 4 years.
We only have about a minute left, Kevin. You must shudder at the thought of what it would cost, however, for the U.S. to take over the Gaza Strip, clean it out, rebuild the entire thing. If we're at a moment now where we're trying to enter a period of austerity, how do you have both?
Yeah, I shudder at the $250 billion that we've spent on Ukraine for a war that the Ukrainians could never
So
win.
you're ready to spend
while we
more
were
on
being
this?
lied to by the deep state in Washington, D.C., which is probably financially compromised.
That means less to go around now, though, doesn't it?
That's exactly right. And that's why I say, if you think about comments that National Security Advisor Mike Waltz said today, they're going to get the details on that right. If you look at Trump's track record regarding foreign policy and America's leadership in the world, it is robust, but it's also not expensive.
It's great to have you with us. Kevin Roberts, Heritage Foundation president, with us back at the table here on Bloomberg TV and radio. Don't be a stranger. Come back again.
I enjoyed it.
Kaylee, fascinating conversation as we wait to hear the latest from the White House on this.
Yep.
We're hearing pushback from world leaders on the idea of taking over Gaza, but also a White House that is yet to kind of detail the plan.
Yeah, we'll see if we hear more from the president. He'll be signing executive orders later this afternoon, so we may have an opportunity for further clarification, and we'll get more into this next with Natasha Hall from CSIS straight ahead here on Bloomberg TV and Radio.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow higher, the S&P as well. NASDAQ, though, in the red. S&P right now up 13, gain there of 0.2%. 354 stocks in the S&P 500 index are advancing. The Dow up 203, up 0.5%. NASDAQ, though, does remain lower. Little change, down 7 points right now, a decline of just under 0.1%. Again, to keep it all in context, we've got the S&P up 0.2%. The 10-year yield at 4.40%. The 2-year currently yielding 4.16%. Gold up $26 the ounce, up 0.9%, $28.68. West Texas Intermediate crude down 2.1%, $71.17 per barrel of WTI. Bitcoin at 97,255. Bitcoin now up by about 0.8%. The motorcycle maker Harley Davidson is reporting revenue for the fourth quarter that missed the average analyst estimate. Shares of Harley Davidson just about unchanged on the day right now. Tesla, meanwhile, that stock lower by 2.8%. Tesla sales plummeted 59% last month in Germany, where CEO Elon Musk asserted himself in national politics like never before. Again, we've got Tesla shares trading lower, Tesla down by 2.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
Many thanks, Charlie Pellet, the voice of the New York subway and Wall Street, and of course, the markets here on Balance of Power. Thanks for being with us. On the Wednesday edition here on Bloomberg TV and Radio, I'm Joe Matthew alongside Kaylee Lyons as we try to answer some of the many questions that were raised following President Trump's news conference last evening when he suggested that the U.S., didn't suggest, he said the U.S. will take over the Gaza Strip, raising questions about how some 2.2 million Palestinians would be moved from that area, whether they would need to be moved forcibly, what it would cost to clean up the massive destruction left by the war between Israel and Hamas, the unexploded ordnance, then, of course, the idea of developing what Donald Trump calls beautiful waterfront property. Here's how it went in the East Room last night.
The U.S. will take over the Gaza Strip, and we will do a job with it, too. We'll own it and be responsible for dismantling all of the dangerous unexploded bombs and other weapons on the site, level the site and get rid of the destroyed buildings, level it out, create an economic development that will supply unlimited numbers of jobs and housing for the people of the area. I don't want to be cute. I don't want to be a wise guy, but the Riviera of the Middle East, this could be something that could be so bad. This could be so magnificent.
The Riviera of the Middle East. It's on that note that we turn to Natasha Hall, Senior Fellow with the Middle East Program at the Center for Strategic and International Studies, here with us on Balance of Power. Natasha, as Joe outlined, we have many questions around this proposition, but I guess to begin with where I assume this would need to start, before the U.S. can go in and redevelop, Palestinians would need to be moved out of Gaza. Do you see the Arab countries that Donald Trump has suggested, Jordan and Egypt, agreeing to take in those millions of people?
Well, they've been unequivocal to date. They will not. This is a non-starter for both Jordan and Egypt, and previous presidents understood that and invested quite heavily in the national security of Jordan and Egypt, forcibly displacing 2 million Palestinians into those territories would create an enormous amount of upheaval, not just in those countries, but in the region and possibly internationally as well. And Saudi Arabia has also sounded the alarm and said that they would not agree to such a plan.
Isn't that enough to stop this? The King of Jordan will be at the White House next week. Stop this idea, not that anything is in motion here, knowing, Natasha, that there was a hope to rekindle talks between Israel and Saudi Arabia. That wouldn't be possible at the same time as a development like this, would it?
Yes, I mean, given this announcement and the hindering of U.S. aid, I think next week's meeting with King Abdullah will probably be one of the most awkward with a stalwart U.S. ally in recent memory. I do suspect that President Trump is probably trying to push Jordan and Egypt, as well as Saudi Arabia, into accepting far more than they thought they would be willing to when it came to the Palestinian issue. President Trump might also be throwing a bone to Netanyahu's far-right coalition, who have been against the ceasefire from day one. And hopefully, this moves us into the second phase. But it still is an unprecedented statement that is, I think, significantly throws international peace and security in jeopardy.
Well, as we consider a second phase here, Natasha, knowing that this initial 42-day ceasefire is going to be expiring just weeks from now, is phase 2 going to begin, or are these negotiations that are essentially going to have to restart along with a resumption of hostilities?
So that's the big question. Netanyahu in sort of the press conference yesterday didn't seem too optimistic about phase 2. But one would hope that it starts immediately. We need to start to continue to see humanitarian aid coming in, but also heavy machinery. There is, thousands of tons of rubble in Gaza right now. There are at least 10,000 bodies underneath that rubble. There needs to be some kind of operation in place to get the Strip moving again, regardless of this forced displacement plan that President Trump announced yesterday. I think the foremost priority is getting the hostages home and safely, those that are still alive, and really continuing to funnel humanitarian aid into the Strip.
Conventional wisdom is Benjamin Netanyahu does not want to reach a phase 2. Will he convince Donald Trump to believe the same?
Well, it seems like with the press conference yesterday, they were in lockstep. Prime Minister Netanyahu was smiling throughout President Trump's statements. It did not seem like he was optimistic about a phase 2. The phase 2 would obviously be more aid, but also, again, the return of Israeli hostages, which the Israeli people want. And so I think this really puts them in danger at this stage, and really throws the security of that region in danger as well. And we've heard from Israel's ambassador to the UN that Israel does not plan on reoccupying the Gaza Strip, has no plans to do so, but also does not want Hamas to be in control there. And they certainly are still in control there. So there's a lot of details to be worked out, a lot of loopholes that I think the United States and Israel could exploit, unfortunately. It just remains to be seen what that will actually look like on the ground.
So what is going to be the role here? As this was obviously President Trump who was speaking about this, but he has Steve Witkoff, who's his special envoy to the region. There's Marco Rubio, the Secretary of State, who I would presume is going to be involved in this as well. Who are the kind of power players here, if you will, that will be helping push this narrative forward?
Yeah, that kind of remains to be seen. Many of the people that we thought would be in the administration are not going to be, but clearly Witkoff will play a major role in this, as he has with ceasefire negotiations in the past. Mike Waltz, the National Security Advisor, will also be moving things forward. And I assume Mike Huckabee, who is, will be the Israel's ambassador there as well, will be pushing many of these things forward. The question is, how is any of this going to happen when U.S. aid has essentially been shut down, which is sort of the other piece of this puzzle, when U.S. funding to UNRWA has also been shut down as well, because that is essentially part of the second phase and the third phase of the ceasefire arrangement.
Much has been said in the last 24 hours following that New York Times report about Iran trying to advance its way to an atomic weapon. Will there be a preemptive attack against Iran's nuclear program?
So many sort of security analysts are saying that the window to do this, when Iran's air defenses are down, is probably about 8 to 9 months. So I think if we do see some kind of premeditated preemptive attack on Iran's nuclear program, it would happen within that time frame. So many of us are holding our breath to see if that does in fact happen. because the potential is definitely there with the maximum pressure campaign that President Trump just ordered restarted, and with this recent meeting with Netanyahu as well.
Well, so if the pressure is there, Natasha, do you see a greater likelihood that that happens under this administration compared to the conversation we were initially having with the Biden administration, encouraging Israel not to preemptively attack in the wake of Iran's second attempt to hit Israel directly?
I think the potential is much higher during this administration. I think President Biden wanted to avoid any kind of Israeli-U.S. attack on Iran. But with this administration, really, who knows? I mean, every day we're waking up to a new reality. It could be just President Trump's bluster in order to get a new deal with Iran that is more advantageous to Israeli and U.S. interests. But that remains to be seen. And undoubtedly, I'm sure it creates a lot of vulnerability for the Iranian regime at the moment, too.
President Trump said yesterday in the Oval Office that if there were an attempt on his life by Iran, it would result in total obliteration. What is the purpose of saying that out loud?
I mean, I think it's the same purpose as he's been saying many of these things out loud. You know, I don't think Iran would ever try to assassinate President Trump. At the end of the day, they are a pragmatic actor despite their errors. But, you know, I think that this was essentially saying that everything is on the table if Iran tries to do something, and that the U.S. would, you know, work with allies in the region to inflict maximum punishment on Iran if necessary. Why he alluded to the assassination, I have no idea. Maybe just speaking to his base and his audience.
Well, when we consider Iran specifically, and those who have aligned themselves with Iran, or at least do have a relationship, thinking here of China, Russia as well, I guess, is typically included in what's frequently described as this axis of evil by people we speak to on this program. Natasha, how do you think other adversaries like China and Russia are watching the way in which Donald Trump navigates the Middle East and the kinds of things that he is saying about what is going to happen in the future?
Well, back to my original point on international peace and security, the way that President Trump is talking about Gaza right now, it harkens back to colonial days. And it certainly gives Russia and it gives China an excuse to go after its colonial ambitions. So the near abroad for Russia, including Ukraine, and for China, Taiwan and the South China Sea. And so I think that that is the danger of using this kind of rhetoric, even if he doesn't plan to actually implement it in any way. It's quite dangerous for the world order more generally. The world order that the United States was instrumental in creating after World War II. If we go away from that and towards just real estate deals, I think it portends a very scary future indeed for all of us.
He was asked if he plans to visit the region. President Trump said that, yes, he would like to visit Israel as well as Gaza. How would a presidential visit be treated on the Gaza Strip?
Well, I think poorly. There would have to be probably unprecedented security for President Trump. It's unclear why he would do that. I would welcome him to go to the Gaza Strip and see the kind of destruction that is there, but also talk to the people that have suffered through that destruction as well. He said that, you know, Gaza is hell and it's unlivable and all of these things. But there's a reason for that because of over 15 months of devastating war. And so, you know, there needs to be reconstruction, but there needs to be reconstruction for the people that live there as well. And so, you know, I suspect there will not be a warm response for President Trump in Gaza, but I do hope that he actually, you know, connects with people on the ground.
Natasha, it's always great to spend some time. Natasha Hall, a senior fellow with the Middle East program at the Center for Strategic and International Studies, CSIS, and a voice of experience here on this matter. Kaylee, you wonder if Donald Trump might have more to say on this. He'll be in front of cameras a bit later on today with a signing Also, a briefing a little bit earlier in the White House suggesting a temporary displacement, I should say, of Palestinians. So we haven't quite crystallized this concept yet.
Yeah, we'll see if we get further clarity from the president as he gets ready to sign executive orders this afternoon. Also, having 2 meetings with 2 very different governors at the White House today. First with the Texas governor, Greg Abbott, and then with California governor, the Democrat, Gavin Newsom, will be visiting him.
Who he has a nickname for. I don't know if he uses that in person, but they did have quite the embrace when Donald Trump went to California. He claims he has since turned on the water. It's not reaching Los Angeles, though, which brings us back to the way that whole infrastructure works there. Maybe they'll figure that out together.
Well, and how that kind of emergency aid is going to fit into what we've discussed on this program. The legislative work ahead for this Congress. What puzzle pieces fit together? Do you get aid in exchange for a debt ceiling? Is it 1 bill, 2, or maybe even 3, as Congressman Frank Lucas suggested to us? We'll have more on that in the late edition of Balance of Power at 5 p.m. right here on Bloomberg TV and radio.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Business Week for this Wednesday, February 5th, 2025. Carol Massar along with Tim Stenovic. It's kind of an interesting day. Some disappointment over a few big earnings, and yet we do see stocks are up. We've seen bonds lower on some weak U.S. economic data. I should say yields moving lower in particular. So I feel like there's a lot coming at investors today. And then there's geopolitics today.
Yeah, certainly going to be a big focus of our program. We're going to have more on the markets with Charlie Pellet in just a minute. You mentioned geopolitics, Carol. Whether it's a land grab in Gaza or a resource grab in Ukraine, a view on the reality and logic of President Trump's recent views.
Yeah, you might have to take some of this pretty seriously, folks. Plus, we mentioned earnings. It's a risk-off trade for both Alphabet and Uber following their quarterly updates, what you need to know as investors certainly react to their results.
All right, how about some European travel? We're going to check in with Trivago CEO on travel trends and tariffs. When are you headed out?
Yeah.
What's the plan?
What time is this show over? No,
Yeah,
just
good
kidding,
luck.
just kidding. Also, check it out, everybody. Green investment defying gravity in the anti-ESG era. It's not a Wicked reference. We'll explain in just a moment.
All that and more coming
Or it
up
is
over
a
the next
Wicked.
hour right here on Bloomberg Business Week. First up, though, checking the day's trade and top business stories. Here he is, Charlie Pellet.
Hi, thank you very much. And here's what's going on. The Dow, the S&P, they're both higher. S&P 500 index right now advancing 11 points, up 0.2%. We've got roughly 350 S&P stocks advancing. The Dow up 207 right now, up by about 0.5%. NASDAQ, though, in the red. NASDAQ trading lower right now, down 9, drop there of just under 0.1%. 10-year at 4.40%. The 2-year, 4.16%. Gold up $23 the ounce, $28.65 now, up by about 0.8%. And West Texas Intermediate crude now down 2.3%. WTI trading lower at $71.05 a barrel. After earnings, Google parent Alphabet shares are declining. Slower growth in its cloud business contributed to lower than expected revenue in the fourth quarter. Right now, Alphabet down by 7.2%. Last night, we heard from Advanced Micro Devices. It gave a disappointing outlook for its data center business. AMD down by 7.5%. Coming up after the close of trading today, we will be hearing from Qualcomm ahead of earnings. That stock up by 0.7%. And also reporting after the close of trading, we will be hearing from MicroStrategy, a Bitcoin proxy. MicroStrategy today down 2.5%. Bitcoin, by the way, up less than 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. All right, folks, focus with us because there's stuff, headlines constantly coming at us. We do want to talk geopolitics. That's where we begin on this Wednesday. President Trump's idea of depopulating and taking over Gaza was broadly welcomed in Israel, with officials praising the surprise proposal as a means to beef up security following the war with Hamas. We were following that story late yesterday and obviously into today. And just moments ago, Tim noticing AFP coming out and saying that this is from Secretary of State Marco Rubio of the United States, saying that the president only wants Palestinians to leave Gaza temporarily while the territory is reconstructed. So again, it feels like a little bit of a rolling back of what we had yesterday.
Well,
Tim.
to that point,
Perhaps.
the White House saying, and this is according to Fox News and the Washington Post, that Trump has not committed to putting U.S. troops on the ground in Gaza. So a fast-moving story here that we're continuing to get clarification on.
Yeah, and these are all important details. I should point out, though, in the Arab world, his suggestion of taking over Gaza was taken very differently. Saudi Arabia called the plan an infringement on the legitimate rights of the Palestinian people, and that was a position echoed by governments across the Middle East. So let's get to our roundtable. With us right now is Bloomberg Opinion International Affairs columnist Mark Champion. He joins us from London. And then in D.C., we have Dana Stroll. She's Senior Fellow and Research Director at the think tank, the Washington Institute for Near East Policy. Among her roles in civil service include from 2021 to 2023, she was Deputy Assistant Secretary of Defense for the Middle East. And that, of course, is the Pentagon's top civilian official with responsibility for the region. So great to pairing, I should say, to talk about what's going on in the Middle East. Welcome to both of you. Mark, I do want to start with you. Your column today makes the point that President Trump's proposal to take over Gaza may be more serious than initially thought, with language and logic similar to a real estate developer's approach. Again, we just got some headlines that there seems to be some clarification that he doesn't necessarily maybe mean to take it over completely, but you say we should take this seriously. How come?
Well, I think that what I'm trying to say is that it's clear that he and the people around him think in these terms. They've been talking about this, Jared Kushner, his son-in-law, who's in real estate, Trump himself, and of course his special envoy, Steve Witkoff, also in real estate. And this, I think we should take seriously that this is the way that they think about these things. That said, this is clearly very unlikely to go anywhere. And what worries me slightly is that here you are at a juncture. You're in a peace process that's in several stages. The second one is going to come up faster than we than think, and it will require the kind of further forward-looking strategy and planning in order to get that through. That has not been there until now because Israel has not been willing, and certainly Hamas has not been willing to engage. So what worries me is that the administration will be thinking of and talking in these terms, which really aren't going to go anywhere. And in the meantime, we have an unsolved problem that will simply return to fighting.
Dana, come on in here. I'm wondering if given your experience in the region, your experience when it comes to diplomatic affairs, if you see this as having any weight to it, or maybe perhaps an off-the-cuff remark, or something that doesn't necessarily or should not necessarily be taken seriously. How are you looking into it?
Well, first of all, I don't think it's an off-the-cuff remark. I think it's quite consistent with the negotiating strategy we've seen from President Trump in just his first 2 weeks in office here, which is to create a crisis, mostly with words and threats, animate his team to then have back-channel negotiations, which de-escalate a situation. And then largely, if you look at Colombia or Mexico or Canada, each government has come with modest or moderate reactions that appear to address Trump's concerns, and then all of a sudden there's a delay in what he has promised in terms of a harsh response. In this case, Netanyahu was about to face a fork in the road. If the Gaza ceasefire moves to phase 2, Israel would have had to end this war. And we've seen with all of these hostage releases, Hamas come out in their uniforms. It certainly doesn't look like the total victory that Prime Minister Netanyahu promised the Israeli people. Now, rather than talk about what Israel is going to do or the Palestinians or the region, all the talk today is about what the United States is going to do. It's totally shifted the dynamics and the focus of this conversation. And I think Trump knows exactly what he's doing here.
Well, and that's a really good point. And, Mark, come on back in, because I think some of what we've been hearing is that, this is about President Trump taking the focus of what really matters. What is the next phases of the ceasefire between Hamas and Israel, and really figuring that out. Do you agree that it's kind of like the flashy thing, look over here, but it kind of gets everybody off the hook of thinking about what's the next phase of this ceasefire?
I think it is. I do think that's part of what he's doing. It's simply that I don't believe he has a thought-through strategy that he's trying to, unlike with the trade, where, he had things that he could get. I simply don't think that he has a strategy that will be able, to get a movement forward, to get the Israelis on board, to get to a place where you can have a serious proposal. And therefore, this kind of real estate talk and so on, I think it is serious in the sense that it's a real distraction. I take it that he knows what he's doing when he's throwing up all these, balls of fire in the air, so everybody's looking a different way. But you need to have something underneath there that you can realistically get people to do, and that I think is missing.
Dana, one of the things I think we keep thinking about as we watch, what's been going on in terms of threats of tariffs, then maybe a little bit of a rollback, and or things change or they're postponed in terms of their enactment. Having said that, we thought about with tariffs, what's the goal here of President Trump? What's the goal here, in your view, of President Trump in terms of meeting with Benjamin Netanyahu, and what his real aim is? President Trump's aim is for Israel and for the Palestinians.
Well, first of all, what Trump wants is Israel's security, and he doesn't want to see Hamas return to a position of governance. And right now, the Arab leaders of the rest of the Middle East aren't really cooperating. They're unwilling to commit any sort of security presence or boots on the ground, meaningful resources beyond humanitarian aid, pressure on the Palestinian Authority in terms of what its leadership could look like in Gaza reconstruction, or an actual day after plan for Gaza. All he's heard from Arab leaders is mostly no, what they're unwilling to bring to the table. And now you see the dynamics sort of shifting. And of course, next week, the table is set for King Abdullah of Jordan, followed by perhaps Egyptian President Sisi, all coming to Washington. And this is going to be the focus. So you see a lot of movement because of what Trump has said yesterday.
Mark, does it threaten relationships that the U.S. has in the region, such as President Trump's relationship with the Kingdom of Saudi Arabia, for example?
Well, not at this point. I do think that there's a huge difference in the situation between his first term and this, his second term. In his first term, the interests of the Gulf states and Israel were more or less aligned. Their biggest concern was Iran, the threat from Iran, so he was able then to get the Abrams Accords, and after that, the Biden administration was able to talk to the Saudis about similar deals because there was no real impediment. And this time around, since October 23, when you've got you've had the war in Gaza in between, and also the sort of interests of Saudi Arabia in particular have changed, much more focused on the economy and stability, less worried about Iran. You now have a different situation, and I just think it's going to be quite difficult to bring these different interests together, where you've got the domestic political concerns of Saudi Arabia and the Gulf states now focused on their own populations and their view of Gaza. And it just makes it harder to bring everybody together. And I'm not clear that, he's got a plan for that.
Dana, when we think about what is the plan, though, for Palestinians, Mark's column gets into, Gaza is a demolition site. It's a mess. And to think about the Palestinians going back there, I mean, how do they live? There's no infrastructure. So there needs to be some kind of rebuild. And you do wonder how this happens going forward. How do you see it playing out in terms of,
First of all, the estimates for the cost of rebuilding Gaza are upwards of $80 billion, and we're probably talking about decades to clear out the rubble and rebuild Gaza. So there's not really a temporary relocation of Palestinians. And based on past U.S. experiences, for example, post-conflict reconstruction in Iraq and then Afghanistan, the difference in Gaza is how concentrated the destruction is and the closed nature of the borders. So civilians can't move around when we're trying to get ordnance, unexploded mines and bombs, and the rubble cleared out. So this was always going to be a huge challenge. Just on the remarks about the region, what's totally different from Trump's first term is the strategic nature of the Middle East. Iran is more vulnerable today than it ever has been because of Israel's military strikes that have taken out its air defenses. Bashar al-Assad is gone in Syria. There's also a ceasefire in Lebanon and a chance, an opportunity to reimagine Lebanon without a stranglehold of Hezbollah governance, and the same thing in Hamas in Gaza. Trump can't do this alone. He needs the Europeans, he needs the Arab leaders, and I think there's an opportunity here for different leaders to bring things to the table. It's not only about Gaza.
Well, Dana, sticking on Gaza, it does raise the question of what the future of Gaza is if this ceasefire holds, if and when the war does end. What is the plan for Gaza if the United States does not go through with the plan that President Trump said yesterday at the White House?
On the current trajectory, without anything other than what we see right now, Gaza is probably going to become something like Mogadishu on the Mediterranean. There's no non-Hamas alternative to governing Gaza. We've seen that there's plenty of Hamas guys who have come out of the tunnels, put their uniforms back on, are distributing humanitarian aid and telling people we're going to help you get back to your homes and we're going to help you rebuild. So that means that Hamas reconstitutes, it regains governance over Gaza, and its remaining leaders have already threatened to do October 7th over and over and over.
Yeah, so hence you understand the difficulties in figuring the way forward and what really is the next step. Dana, thank you so much. Really appreciate your input. Dana Stroll, she's Senior Fellow and Research Director at the Washington Institute for Near East Policy and someone who has been on the inside within the U.S. government, really understanding and working on this region. Dana, thank you so much. Hey, Mark, before we wrap up with you, we did want to ask you about Russia and Ukraine, the role the U.S. and President Trump will play in what happens next. We know U.S. allies expect the Trump administration to present a long-awaited plan to end Russia's war in Ukraine at the Munich Security Conference in Germany next week. This is according to folks in the know. You've got a second column out today about President Trump saying he wants some of Ukraine's resources in return for continuing aid. You note that this is a price worth paying. Why?
Well, first of all, it's something that President Zelensky of Ukraine offered. So he put out this victory plan last year, and one of the 5 baskets in there was incentives for the West. But it's quite clear that he had a transactional Donald Trump in mind. Incentives to say, look, you're not just helping us, you're helping yourselves. After the war, we have a lot of resources, and we're willing to open them up and make them available to you. So there's lithium, there's magnesium, there's a number of different resources that would be useful in industry and the EV industry and so on. So he was just it's already there, offered. Trump has taken up the offer. It's exactly what Zelensky was trying to do. And, given Europe's weakness militarily, its failure to really build military capabilities, once it became clear that the peace deadline of the Cold War was over, it really isn't able to do it on its own. So Ukraine needs the U.S. and Europe. If you could describe this as the price that Europe should be willing to pay, allowing the U.S. under Trump to have access to some of these materials, just keep quiet about it because they need the American military. They need Trump.
Mark, we're 3 years into this war, though. How does this actually end it?
I just got about 30 seconds, Mark.
Yeah, I mean, we'll see what the U.S. plan actually is on offer. There are ways to do it. I've written about it, but it's really not going to be easy. An instant overnight deal is highly unlikely.
Yeah, there's a lot. It's a full plate, certainly, when you look around the world. Mark, thank you so much. So appreciate you weighing in on both what's going on potentially in the Middle East and then, of course, the ongoing war there in Russia and Ukraine. Bloomberg Opinion international affairs columnist Mark Champion joining us from London. Hey, coming up, folks, we're going to get to 2 names that are moving in a big way in today's trade. We're talking about Alphabet and Uber. Both of those stocks are tanking.
Hey, the S&P 500, though, higher by 0.3%. The NASDAQ composite pretty much flat right now. The Dow Jones Industrial Average up 0.6%.
A little Taylor Swift. Investors shaking
it off. She has so many songs, you could just go anywhere.
It's Taylor's world. We're just living in it, everybody. Hey, coming up, we will get the lowdown on Alphabet and Uber, their quarterly updates. Investors not impressed. Details when we come back to you on this Wednesday. Carol Masterton, Stedovic. This is Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got NASDAQ just turning higher. Little change, but still back in the green now, up by about 4 points. S&P 500 index up 15 on the S&P. That is a gain now of 0.3%. S&P trading at 6,053. The Dow up 258 now, up by about 0.6%. The 10-year at 4.40% with the 2-year 4.16%. Gold up $25 the ounce, 28.67. Trading in record territory, up 0.9%. West Texas Intermediate crude 71.07 a barrel, down now by 2.3%. Uber out with a first quarter bookings outlook that disappointed analysts, cautioning that currency headwinds and severe winter weather would have an impact on trips and deliveries in the current period. Uber shares, they are trading right now. We've got Uber shares trading down 8.8%. Now rival Lyft, it reports next week, Lyft down by 4.8%. Uber, meanwhile, has set up a wait list for customers interested in requesting a driverless Waymo vehicle in Austin ahead of a planned launch later on this year. And briefly, the French Prime Minister has survived a second no-confidence vote for on-demand news 24 hours a day. Subscribe to Bloomberg News now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
And you know who's at the top of that list, Charlie?
I do not.
Tim Stenovec.
Oh, yeah.
Signing up for Waymos.
You know, they missed in that other bets category, but I did my part. I took my $30 ride in San Francisco.
I've never seen somebody so excited.
You know why?
By riding something.
Because I was so skeptical.
I know.
For so long.
I was so sure you were not going to like it.
And for years I talked I'm not going to get in one of those things.
Right.
But a wise person once told me to embrace technology.
Who said that?
Mandeep Singh.
He did indeed. And he joins us now to kind of make sense of so much going on, including Alphabet, Uber, and Snap. Mandeep, of course, is Bloomberg Intelligence Senior Tech Industry Analyst here in studio. We do have to embrace everything that's going on, right? Because kind of the horses left the barn. Like, it's happening when it comes to AI and stuff.
Yeah, and especially when you see, you know, the tech companies doubling down on their capex. I mean, look, as much as we talked about DeepSeek, you know, a couple of weeks back, when you look at the results, what Alphabet told us yesterday is they are going all in when it comes to the capex investments. And I think what you will find is a lot of the apps where they have, you know, 2 billion plus monthly active users will have more AI. I mean, that's what Meta is doing. That's why they raised their capex. Meta doesn't have a separate cloud business. They raised their capex for their own app consumption. I think Google is doing the same here.
So what's the spend? What is that big capex spend that was kind of a shocker of a number when it came yesterday? What is it that Alphabet is spending it all on? Is it all about data centers? What is it?
Data centers, and really they need more compute capacity for even running YouTube now. And all the changes that will happen on their search page. I mean, they talked about AI overviews being a big component of search now, and they're able to layer ads on top of AI overviews. So they're monetizing all this Gen AI rollout.
I think AI overviews works really well, and I think it's an important distinction to make is that if you're not even using Gemini or another LLM from, you know, name the company here, you're still using Alphabet's AI technology.
Exactly.
When you're
Gemini
doing search.
is infused in every search query. I mean, most of the search queries that show AI overviews is using Gemini underneath.
So Sundar Pichai said that the investment is directly driving revenue because it helps customers. Unpack that for us.
Well, so look, I mean, when it comes to search and what they do, you know, probably I don't know. It's in some order of trillion, the total number of search queries. Now,
so when he's saying customers, he's saying people who don't even pay for Google in the sense of like, we're not Google Cloud customers. We're just using search. It's helping us there.
Yeah, and people are spending more time on the search page now. So previously, you know, you go to the Google page, 10 blue links, you navigate to that link. Now you're spending more time on that search page because you can do so much more. You can search with an image, you can search with audio, the AI overviews keeps you on the page longer. So just the amount of time you're spending on that search page itself is increasing.
Is that dominance? I mean, we talk about this a lot with the big tech names, like their dominance. Like you hear about what the reach that Alphabet has, that dominance. Is that as they continue to grow and build out an AI and that just kind of grows it even more? Like, does it make it more problematic for the company going forward, that dominance?
I mean, the way I look at it is they are the most vertically integrated right now when it comes to generative AI because they own the operating system.
Right.
They own this distribution with 7 apps with 2 billion plus monthly active users. They have all this data center footprint. They have their own large language model. Remember, Microsoft is using GPT. And they do their own chips with TPUs. So they are not reliant on NVIDIA for training these models. So literally, they have all the pieces you need to deploy AI end to end. And look, they have more competition now with ChatGPT and DeepSeek and all these rivals. But in the end, like the fact that they can natively integrate the LLM at the operating system layer, it's a huge advantage.
Okay, to your point on DeepSeek, also Pichai on the earnings call said DeepSeek is a, quote, tremendous team, but said that Google's models have also excelled in efficiency. What do we know about the efficiency of Google's models compared to DeepSeek? And we don't know a lot about DeepSeek.
Yeah.
But what do we know about the efficiency that Google's been able to achieve?
Yeah, and in fact, there was a question yesterday on cost per million tokens. That's a metric that everyone is fixated on.
That's the one we should be focused on.
Yes, and that's where Google talked about releasing Gemini Flash, which is their latest model that is the most efficient in terms of, the cost per million tokens. And look, as I said, they use their own chips. So that's the biggest kind of contributor to the efficiency that everyone is fixated on. Because if you're doing AI inferencing and you don't have to buy expensive GPUs from NVIDIA and everything is being done in-house, that's a huge advantage in terms of cost. And over time, given the scale at which Google operates, I think that will be a big differentiator relative to other hyperscalers. I mean, Amazon is trying to do the same with Trainium and, their approach, but Google is way ahead when it comes to, their 6th version of TPUs and what it is able to do on the training and inferencing side.
Mandeep, you sound optimistic
about
Alphabet. The stock's down almost 8%. It was down about 6-7%, in the aftermarket right after results last night. So what is it that investors are so concerned about, and are you concerned about?
I think the bear case is, look, this was a company that is generating over $100 billion plus in free cash flow. If you're raising the CapEx to $75 billion,
it's going to eat into that, right?
That free cash flow is going down. So the question is, how are you monetizing it? And Google Cloud is the clearest way to see that monetization. And because the growth went from 35 to 30%, now I'll remind everyone, Microsoft's growth also went from 34 to 31%. And Microsoft is a $74 billion run rate cloud business. In the case of Google, it's close to $50 billion. What Microsoft does really well is tell investors what is the AI contribution. They said it was $13 billion run rate when they reported the latest results. In the case of Google, I don't know what is the run rate of AI as a percent of their cloud revenue. Now, if they start disclosing that, like this, they said the GCP portion grew faster, but they did not give us a number. In the case of Microsoft, the GitHub Copilot number, the Microsoft Copilot. So all that disclosure makes a difference in terms of helping understand, okay, all these things are contributing on the AI side.
And especially against the spend, right? In terms of the increased spend. Should we talk Uber?
I want to talk Uber, Uber shares down, more than 8% as we speak. This is on weak first quarter gross bookings guidance. What's the concern when it comes to Uber?
Look, this is a company that's really got, a monopoly when it comes to the mobility ride-sharing side. The big concern is around technology disruption. And, we're talking about Waymo rides. I mean, if Waymo is expanding in 10 other cities, and right now it's in 5 cities, and total number of rides are like close to 10 million.
But Uber's got a partnership with Waymo.
Not in every city. See, that's the...
So are they frenemies or are they more enemies?
At least it sounds like Waymo wants to do certain cities on their own through the Waymo One app, certain cities where they want to use the Uber distribution. And that's where if Tesla is serious about rolling out robotaxis, which they mentioned on their earnings call, then you've got 2 big competitors to Uber on the mobility side. And mobility is where Uber makes all its money. They don't make a ton of money on the delivery side. It's the mobility side that's the primary driver.
Is that an existential crisis for Uber? Or are we so many years away from widespread adoption of autonomous vehicles that it doesn't really matter?
it feels like it will be more gradual than what the market is anticipating right now. And Dara actually mentioned it on the call that safety considerations will come into play, and it will be a city-by-city rollout as opposed to just saying, every city is the same.
Look at him. He's like, can't wait to get in his
Have you driven with some of these Uber and Lyft drivers? Like, what's the safety concern here?
But the first time there's an accident, everybody's going to think twice.
There have been accidents, and there have been like instances where certain cars have been stuck in roundabouts, or
But every time that happens, like it's a headline, and we'll talk about it.
But it sounds like there is a clear preference for rides with no drivers, and people are embracing that more and more. So
you know what it is? We don't have to really talk to anybody. So that's what we really want. And there's no music or anything playing.
It's not that for me. It's that I feel like humans make mistakes and have bad judgment.
Wait, it's the start, stop.
Yeah.
Uber CEO did also talk about insurance costs. Is that a legitimate concern? He talked about rising costs in different parts of the country, and he's, I guess, looking to push for some tort reform and push for insurance reform. Is he right to single that out?
Yeah, I think insurance inflation is hurting the profitability, the gross margins of these companies, and the scale at which Uber operates. If you're not doing your own insurance, it's really going to eat into your margin. So with a company like Uber, you have to show profitability, because that's when everyone believes that was the problem. Since the IPO is they were never profitable. Now they have started to show profitability. All these things, have come out, Waymo and insurance costs, and so that's been an overhang.
Why don't they have the pricing power that they should have, given that their dominance in the market, and given that Lyft is it's basically a duopoly in most parts of the country.
And now DoorDash is partnering with Lyft, so hopefully that makes Lyft a more formidable competitor to Uber. But you're right. I mean, it is a duopoly, and they should have pricing power. The problem is all the regulatory scrutiny that Uber has. So if they are making too much in their take rate, that draws regulators' attention. And now, if Waymo is in San Francisco, it's hurting take rates for Uber, because even if the volume is not that big, it's taking all the incremental rides from.
Because what's the take rate for Waymo? 100%.
Yeah.
There's no driver to pay.
Yeah. So,
can I get 20 seconds on Snap, because it's down 7%? Just real quickly, what do we need to know?
I mean, just the growth rate. Their ad growth was 10%. Yes, they have diversified into subscriptions. It's a 500 million stream, but ad growth of 10% when Meta, as a much bigger competitor, is growing high teens. You have to think, they need to execute better on the ad side.
All right, you have to take a look at it all, right, to understand it. Mandeep, thank you so much. Really appreciate it. Bloomberg Intelligence Senior Tech Industry Analyst Mandeep Singh joining us here in our studio. And I mean, all three of those names are much lower, and that even with that, though, Tim, we've got the overall market trading higher today.
Yeah, the S&P up 0.2%, off our best levels of the day for the Nasdaq, back in the red, down close to 0.1%. The Dow higher by 0.6%.
When we come back, folks, we're going to talk a little bit about the hospitality industry. We're going to talk about travel. Europe's high travel costs driving Americans away. We'll see, though, if that's what our next CEO has to say. He's in the business. We'll get an update. That's next on Business Week.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P 500 index advancing, stocks bouncing back, gains in most major industries, overshadowing underwhelming earnings from some tech heavyweights. Case in point, Alphabet down 7.6%, AMD down 7.2%, but the S&P up 14 right now, up 0.2%, the Dow up 260, up 0.6%. NASDAQ has been swinging between gains and losses, back now in the red. Key takeaway for NASDAQ, little change, down less than 0.1%. 10-year 4.41%, but the 2-year 4.17%. Spot gold up 0.9%, 28.68 the ounce. West Texas Intermediate crude down 0.2%, 71.08 a barrel. After earnings, shares of the Walt Disney Company are down 1.7%. Disney did report fiscal second quarter results that topped analyst estimates, fueled by the blockbuster film Moana 2 and higher income from its streaming services. And among the names reporting today after the close of trading, we will be hearing from Qualcomm. It is the biggest maker of mobile phone chips. Also after the bell, Bitcoin proxy MicroStrategy. Again, recapping here, S&P up 15. That is a gain of 0.2%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, Bloomberg News reporting out today that Europe's high travel costs are driving Americans away, and that really travelers from around the world are feeling priced out of Europe. And as we said, those big spending Americans are no exception. It's a great thing to ask about with our next guest, as are their company earnings, which came out last night. We welcome Trivago CEO Johannes Thomas, joining us from Dusseldorf, Germany. Trivago ADRs, by the way, are down about 4% today, but they are up about 35% here in 2025. Johannes, good to have you here. Welcome. How are you?
I'm very good, thank you. I appreciate that you're having me around. Thank you.
Well, it's nice to be talking with you. Remind our world about kind of your customers, your base customers in business, and the global view that you see when it comes to travel.
I think base customer is the travel world. It's a 1.5 trillion market in size, so pretty exciting. It's also growing 5 to 10% a year. So a big and growing business. And Trivago is a leading brand across the globe in travel. And we have been working on the last 1.5 years to reestablish the brand after a near-death experience during the pandemic.
How's that refresh going right now? What can you point to show a recovery from that near-death experience as you described it?
Yeah, I was returning to the company 1.5 years ago together with a leadership team, and we all have been folks that we were at Trivago for a decade, brought it to the IPO. And then during the pandemic, we left basically. And then out of the pandemic, the company didn't come strong. And we think that is a result of low investment during the pandemic. Trivago is built as a brand, so brand investment is important. If you invest into a brand during a period where nobody's traveling, it's pretty inefficient. So there was not a good place to invest in brand. And then after the pandemic stopped in around the beginning of 2022, Trivago was pretty conservative in investing into brand. Other companies basically recovered in size, other travel companies. Trivago didn't. And that's when one of the founders gave me and others a call if we want to come back to bring back a blueprint that has proven successful. And the last 1.5 years, we worked hard on getting the company back on track. When we arrived in Q2 2023, we were shrinking 14%. Now we've stabilized and brought the business back into growth last quarter, and we see a strong double-digit growth in Q1, which we are very excited about.
So talk to us about what you are seeing in terms of travel demand specifically and how that compares with a year ago. So in other words, is travel up? You guys just reported your numbers, and you did break it down into various regions of the world. So give us some perspective, a little bit more insight into those earnings, because investors seem a little bit disappointed here. But talk to us about what you are seeing and how that plays into your business, whether it's more upbeat than a year ago, or if you're seeing, consumers, travelers being a little bit more cautious.
Yeah. So I think last year was the year where we exceeded 2019 levels quite substantially already. So travel is hot. People want to travel. It's exciting. They want to spend and experience the world. It's the number one discretionary expense people have, yeah? And that is what continues to be true. We see travel strong across all segments, being at the US, being at Europe, rest of the world, Asia, pretty strong travel demand. We see prices slightly up, but I think at fairly consistent levels. So travel is strong, and we expect it to be a strong year, maybe an even stronger year than last year.
Hey, Johannes, curious about sentiment just across Europe right now and what you're seeing as a European CEO, or CEO, I should say, in Europe. We've spoken quite a bit to folks in the last couple of weeks who've returned from Davos, and two of them have told us that there is just a feeling of, optimism when it comes to American CEOs and CEOs of American companies, but a feeling of pessimism when it comes to the way that CEOs of European companies feel. Certainly there's some generalizations in there, but I'm curious about your view.
Yeah, I'm skeptical about the level of bureaucracy and the pace of execution of German companies as well, and European companies as well. There's just a lot of regulations and things that make companies slow here. I think we try to be very different, having a growth mindset, a fanatic learning mindset as a company. We are in the digital space. We are operating at global scale. We do TV marketing campaigns in more than 20 markets. We operate in more than 40 markets. So it's not for us a European or German game. But overall, I think Europe has to amp up and has to put a mindset in place where hard and smart work is needed to be successful. And I think there needs to be a mindset shift in Europe. Otherwise, it will be a decade that is difficult for the region.
But are you seeing? So you're not seeing that weakness across your platforms, or you are seeing it?
We are not seeing it in our developed European segment that travel is weak. I mean, people have money. It's not that there's no money in this region. It's more a question of, can you keep growing, or will you be outgrown from other regions over time? They have still good budget to invest into travel, but what destinations will you go to in the future? Hotels are 30% up compared to pre-pandemic, and people are feeling that. And the number one struggle for travelers is security and safety. Number one, geopolitical issues. People stay closer to home. And number two is price. They increased expensive, and that's also true across the world. Price pressure, because travel became so expensive, is a big challenge for travelers.
So Johannes,
for Europeans, it will be even more. Yeah.
Yeah. Apologies. What would you say is the way for European regulators to sort of decrease bureaucracy, to encourage innovation, to create real competition, so there isn't this lost decade?
You know, I'm not an expert in this topic. I just think less rules, more freedom to people, so they can actually take decisions themselves. If I have somebody else taking decisions for me all the time, you know, I stop taking decisions myself, and I think that's where a lot of collective intelligence is being lost. So I think that would be a good start, just to for every rule or legislation you put in place, you kill 5, and then you maybe get to a way where it's less wild of regulation. Yeah.
Johannes, before you go, just got about 35 seconds here. Geopolitics, trade wars, tariffs, all of this plays out in global financial markets, plays out in the FX market, which can certainly impact whether or not a consumer feels like their currency will go farther along. How is all of this impacting travel demand, if at all? And again, only got about 30 seconds.
So I think travel hugely correlates with GDP. So it depends where the economy is going, whether travel will be well off or not. And it's rather reacting quickly on it. People delay demand, delay investments. Otherwise, we see that people already book early in advance to make sure they get a good deal. They compare prices, and that's where our product fits pretty well into the proposition that users are looking for.
Got it. Johannes, thank you. Johannes Thomas, Trivago CEO. Hey, still to come, everyone. What anti-ESG era green financing is smashing records? We'll explain when we come back.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, U.S. government websites, they've been pulled down and scrubbed of so-called woke references. One, global banks are rolling back on that alliance to cut back on carbon emissions. Two, and Tim, everybody out there, don't you dare even say ESG in an investment environment.
Hey, you said it, I didn't.
Yeah.
Okay.
No,
Yet, despite all of this, green financing is actually having a moment. With the details, back with us is Bloomberg opinion editor Mark Gongloff, who covers all aspects of the green and climate space for Bloomberg Opinion. He joins us here in the studio. Check out Mark's story and more from Bloomberg Opinion on the terminal at OPIN Go and at Bloomberg.com/opinion. You have the numbers. You have the receipts. What's happening when it comes to green financing?
Yes, quietly in the background, in the middle of all of this anti-ESG stuff, U.S. green debt issuance last year hit a record of about $150 billion.
What is that? Define what it is.
That's green. That's bonds and loans which go to building like renewable energy stuff, basically energy transition type stuff. And so this is all the stuff that, you know, it's ESG. It is literally ESG stuff, but without the ESG label. And this is being issued by all of these banks who abandoned the Net Zero Banking Alliance just a couple of months ago because everybody's scurrying away from being openly embracing all of these things, but they're also recognizing that there's still a lot of money to be made in these things.
So this was last year, and I wonder how much of this is off of, you know, initiatives from the Biden administration, money out there, programs, like how much of that is that, Mark, and folks are going to say to us, well, wait a minute, let's see what's going to happen this year with the new administration.
For sure. I mean, that's a good question. And what you saw was in these debt issuances were lower under Trump, but they did keep marching upward. We have been on a steady trajectory, which matches the global picture for green investment, which has been on a steady trajectory since 2020, when Trump was still in office. It was still outpacing fossil fuel investment, even in Trump's last year in office. So there's reason to hope it will continue.
Is the market solving this then? Like if you have pushback from different politicians and, you know, companies can't necessarily afford to go back and forth when it comes to regulations every 4 years or whatever it is the market going to solve this?
The market is solving it to some degree. Now, I would argue that you need everybody rowing in the same direction. Governments, the U.S. government especially, companies, NGOs, people, everybody rowing together.
That's not happening.
Right now, yeah, the biggest rower of all, the U.S. government, is saying, we're checking out. In fact, we're going to row in the other direction. But the market is working toward this because, you know, it's like the old saying, if there's a gold rush, if you don't own the mine, sell the shovels. Well, you know, you're selling shovels here because there is still a green gold rush, and the banks are also financing these shovels and these mines, and they're making money that way. So the market is taking care of that. And also, you know, clean energy is cheaper than fossil fuel energy. All of these things and regulations, as you say, differ from between California and Kansas and between the U.S. and Germany. And so it's just easier to go with the flow for a lot of these companies and go to the easiest common denominator is increasing your energy efficiency, which helps your bottom line anyway.
Yeah, it's so interesting. I think about this a lot with energy, that it's going to be a couple of issues. Cost is a big one, right? We're going to compare where, you know, the different energy sources, we know renewables, right, are much more, you know, competitive, reliability, like all these different things. Having said that, when you look at this and what's going on in terms of green financing, it's a global market. So should we assume that a lot of this is happening in terms of like China and overseas, or what?
For sure.
Okay.
Yes. I mean, absolutely. Last year, there were $2.1 trillion in green investing last year, which is double the investment that went into fossil fuels. 800 billion of that was from China. That was more than double what the U.S. did. China is clearly the leader. It's growing faster than we are. But here's the thing. If we check out of that game, then we are ceding all of that territory to China. China is also growing fast because it still has a smaller base from which to grow. We're growing more slowly because we have a bigger base. But we're going to cede a lot of this technology to China, to Europe, to other economies. And do we really want to do that if we want to stay competitive in the decades to come?
Does everyone agree that this is, I shouldn't say everyone, because nobody agrees on, you know, nothing's monolithic out there, right?
Tim.
But if you were to think about it from just a business perspective, not anything to do with the climate, if you were just making business decisions, is this Is there agreement that this is the right direction?
Yeah, I think there's general agreement. Obviously, there may be some specific cases where, I don't know, for some reason, burning coal might be better for your business than others, but those feel like rarer and rarer cases to me. And so there is generally agreement. Even if you politically disagree with this stuff, even if you don't want to say ESG or DEI or any of these other dirty words, you still will see this show up in your bottom line. And investors and regulators are going to keep pushing for it, too.
I think what's fascinating, there's a great chart in the story. I'm not sure if we showed it for our TV folks, but this whole idea of what you mentioned is green investment keeps outpacing fossil fuels. So as much as we are still very much a fossil fuel economy, that in terms of where the investment dollars are going has really been into the all energy or the green space.
Yeah, it was double last year, and the growth in fossil fuel investment has continued over that time, but it has slowed down. It barely grew last year, which is a really interesting thing. We're still moving too slowly, and we still need to do much more, but there is hope out there as long as everybody keeps recognizing what they can benefit and lose if they don't do this.
Yeah, and we'll see how much in terms of U.S. government policy, whether or not that impacts that.
Yeah.
Mark Ungloff, thank you so much. Really appreciate it. I feel like there's some optimism there.
Yeah, follow the money.
Follow the money. That is always, always true. Mark is editor of Bloomberg Opinion. You can check out his story and more from Bloomberg Opinion. Just go to the Bloomberg and also check out Bloomberg.com/opinion. All right, for those of you watching on television, the close is coming your way in just a moment. Tim and I continuing right here on Business Week.
Yeah, we get a check on small business with Christina Stembel of Farm Girl Flowers and a check of big business with the Ford CEO. That's next.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Michael Wallace. More countries are blasting President Trump's idea to have the U.S. take over Gaza.
White House Press Secretary Caroline Leavitt describes the president's proposal as quite in keeping with his style.
This is an out-of-the-box idea. That's who President Trump is. That's why the American people elected him.
And she says Trump's idea stems from his belief that the United States must be involved in rebuilding the region.
That does not mean boots on the ground in Gaza. It does not mean American taxpayers will be funding this effort.
The plan would mean displacing more than 2 million Palestinians in order to build what Trump calls the Riviera of the Middle East. Linda Kenyon, CBS News, the White House.
Many of the U.S.'s allies are still calling for a two-state solution between Israel and Palestinians. This man says he will not leave Gaza.
This president, who is called Donald Trump, comes to us with a new method to displace us from our country where we are rooted. This is our land. We will not get out of it.
Secretary of State Marco Rubio says Trump's offer was generous, not hostile. Rubio has reached a deal with Guatemala. CBS's Cami McCormick has details.
Under this agreement, Guatemala will accept migrants deported from the U.S. and then return them to their home countries. The U.S. would pay for it. Rubio said Guatemala was already taking back its nationals.
The offer to increase these flights, these deportations by 40%. It's very important for us in terms of the migratory situation that we're facing. His willingness to accept not just nationals, but those from other nationalities.
Immigration has been a major focus on Rubio's first foreign trip, a 5-country tour of Central America.
President Trump's former impeachment lawyer, Pam Bondi, has been sworn in as Attorney General.
She's going to restore fair, equal, and impartial justice and restore the constitutional rule of law in America.
CBS News has confirmed Bondi will order a pause of all federal funding for sanctuary cities. CBS's Jason Brooks tells us what we will be paying more for now that the U.S. has slapped 10% tariffs on Chinese goods.
Electronics is the biggest category impacted by the 10% tariff. Clothing, furniture, and toys are other popular Chinese imports, with Barbie maker Mattel reporting in its earnings that it plans to raise prices and diversify its supply chain to offset the China tariff.
Police in Greencastle, Pennsylvania are investigating the theft of 100,000 eggs from a trailer at an egg production company. This man lives in that town.
I'm very surprised that would happen in Greencastle. I actually work only about a couple hundred yards from there, so That's kind of interesting to me.
Egg prices have almost doubled since bird flu has forced the slaughter of millions of chickens. There's now an egg shortage. This is CBS News.
Hearing.com.